FNCI, Jackie Mercer, but because we're talking about things that are so close, it gets a bit uncomfortable sometimes. So Jackie wasn't able to participate, but that's a good sign in the sense that we are talking about the things that matter, and she didn't want to put herself in a difficult position. But all the content of, she's reviewed all the content, and we kind of have a good idea where FNCI is at. Okay, so any questions, anything we need to deal with before we start? We got a full day and we're going to stop right at 4. They need this room at 4:01. So it would be lovely to see you all tomorrow after 4. Are we good? Any changes to the agenda, anything like that? Okay. Alistair, over to you. And I think Alistair wants to take questions as he goes. Is that right?
Yeah. And I'm going to assume everyone can hear me online. If you can't, just let someone know and they'll tell me. But this is strange to be speaking virtually and in person at the same time. I don't know if I've really done that. And so I'm going to be looking all over the place, but we'll see what happens. Move this closer. So for those who I haven't met, my name is Alistair Handley. I'm with Radical. We're a Calgary-based organization. And I've been involved in carbon markets for about 14 years now, maybe longer. And as a result of that, I've got some very strong narratives, some very strong opinions on the markets and where they're going. And that's what I really want to share with you today. Some of you may disagree with what I say, and that's okay too. I'm always happy to learn where I might be right and where I might be wrong. So we'll see what happens here. So what's a radical? I asked this because Radical is an interesting company, and a radical technically in botany is the first shoot to emerge from a seed as it's growing. And Charles Darwin spoke about the radical as the brains of the plant, seeking the most optimum conditions in its environment to grow and be successful. And so we thought that's pretty neat, because that's what we're trying to do here, is be successful in the carbon world. And the other connotation with radical is the definition of people that are advocating for fundamental change or revolution in current practices. And this also speaks to some of the work we do when it comes to carbon markets and what we say within the organization of trying to transform our reality from what we face today with our current conditions of climate to where we want to go. And those two things really describe the ethos in Radical and what the team at Radical is involved with. So it's a pretty unique place. And as I was thinking about this presentation, I was going, wow, nature-based solutions, they all start with a radical. And it's coincidental, but it's kind of neat. Or that's the way I think about it. And when we think about starting on a journey in carbon, or in this journey of learning about carbon credits and carbon markets, there's 4 fundamental questions that I think need to be asked by any organization or any group venturing into the space. And these are the 4 questions that is in our organization that we actually try to answer. So the first question really is, how do we get started? Whether or not you're making a net zero commitment, whether or not you're trying to reduce your carbon footprint, this is a new and confusing space. So the first question that needs to get asked and answered is how do we get started? The next question that we think is critically important is, how do we measure, manage, and reduce our own emissions? Everyone around this table that's working in this space or working on carbon credits, I would hope, is also looking at how do they manage and reduce their emissions, personally or within their businesses or within the nations themselves. What can we do immediately, right, within our own circle of influence? And this is another very important question that people need to ask and need to get answered. And then we get down closer to the heart of the matter here, which is, how do we develop carbon credits? Carbon credit development is complicated. It takes time, it takes effort, but it's not rocket science. And I can attest to that, because when I got started in developing carbon credits, I didn't know how to develop a carbon credit, didn't know anything about carbon credits. I just fell into the space, and coincidentally, years later, have successfully worked with people to develop millions of these things. So it can be done, and I'm proof that anybody can go out and develop a carbon credit. You just have to be very tenacious. And then the last question is, how do we buy credits, or how do we sell credits? And this is also something that's critically important around the FNCI when we create these credits, is how do you go about monetizing those credits? What are the opportunities to do that? So I think of these four fundamental questions that everybody in the rooms should be thinking about, and certainly the nations that are on this journey are thinking about, or should be thinking about and looking about how to go and answer those questions. So context. The context around markets today, around net zero, is something that can't be understated. And we've probably all heard politicians, be it in the United States or be it in Canada, whether federally or provincially, go out and go, we're going to complain because the cost to get to net zero has been estimated at 130 trillion USD by 2050. $2 trillion alone in Canada is the budget, or the estimated cost to get to net zero. And I've spoken to provincial governments that have said, wow, that's expensive, it's going to kill jobs, it's going to do all sorts of things. And that's one perspective that a lot of people will take. The perspective that I have and that Radical has is a little different, because we believe that it's a $130 trillion opportunity. Because yes, it's going to cost $130 trillion, but the companies and people that provide the goods and services required to get to net zero are going to make $130 trillion. And within that space, whether it be direct air capture, whether it be new energy efficient solution, new forms of energy, the transition to hydrogen, all sorts of things, within that transition and critical to the transition are carbon credits. And carbon credits are, I believe, a critical part of this transition. And there's going to be a significant amount of money spent on carbon credits over the next 10, 15, 20 years. In fact, there are people in the United States, one very bold marketer who went so far as to say that carbon credits are the next $1 trillion asset class. And he's indicative of people that are getting into the market that used to be in streaming, resource streaming deals and marketing deals and generating revenues for their investors. And we've seen millions and millions of dollars get invested into carbon streaming companies that are public or private, that are now in the space of making money by funding carbon projects and taking that credit stream. And that's not necessarily a bad thing, right? It's how capitalism is going to work in theory to drive more change. But this is sort of the context that I want you to think about, because what we're talking about locally here in BC around these carbon credits are part of a much, much bigger global picture with respect to this transition. So what I'm going to do this morning, and we've got lots of time this morning since Jackie bowed out, is I'm going to talk about carbon pricing instruments, voluntary carbon markets, complexity in the market, credit fundamentals, and then closing thoughts, which really means I just get to make up stuff as I go along. And as questions come in and sort of respond to anything that does come up. But that's really what I want to go through. And one of the things I want to go through and get to is what I think one of the big barriers are to generating credits in BC, which takes me back to what was said yesterday by Crystal Smith, who said, and this is not a quote because I don't write that fast, we cannot take no for an answer, or it cannot be done. We want to take on the challenges of climate change, and we want to work together to build a decarbonized economy, right? So what we face right now in BC with the FNCI is we face barriers to being able to participate in that economy. And one of the things I want to get to is what I think that key barrier is, and something that this group needs to get up and challenge the government on to really break the logjam that's stopping nations from being able to go out and generate credits. Not all nations, but we'll get to that too. So let's talk about carbon pricing instruments. And again, feel free to interrupt with questions if you have any. So carbon pricing instruments or carbon pricing mechanisms are implemented by government. And there are lots of different ways that governments can influence or price carbon. There's direct carbon pricing instruments, and there's indirect. We're going to talk about direct. So the direct carbon pricing implements are a carbon tax. This is what we have applied through the federal government. It's what we've had applied in BC for a considerable period of time. Another pricing mechanism is an ETS, or an emissions trading system. This is what exists in Europe, in California, and a variety of other jurisdictions around the world. Also known as a cap and trade system, where government has put a cap, a hard cap on emissions from a variety of sectors. And within that program, an emitter needs to purchase an allowance to pollute. In other words, they're paying money to the government for every ton of pollution, carbon dioxide equivalent that they put out. And then the last mechanism is a carbon crediting mechanism, which I would suggest are a bit rarer than the other two. But the most critical thing I want you to take away from this is carbon pricing instruments generate revenues for governments. They do not generate revenues for project proponents. They do not generate revenues for First Nations creating carbon credits. And this is critical to understand because by definition, when you have a carbon pricing instrument put in place within a government, it puts a government in conflict with carbon markets or being able to use a carbon credit to meet a compliance obligation. Alberta is a very good example of this. Alberta was the first jurisdiction in North and South America to put a price on carbon back in 2007. And when they put that market into place, emitters had targets to hit. If they didn't hit those targets, they would have to pay a fine for every ton of emissions above the target. But the government also said, you can choose to invest in carbon credits. And rather than pay the money to the governments, you can buy a carbon credit and retire that carbon credit instead, which gave the companies the ability to choose as to whether or not they would invest in an activity to reduce emissions at source, do nothing and just pay the government a fine, or purchase a carbon credit from a project that they wanted to invest in and retire that instead. And in Alberta, there's been, well, I don't even know what the latest numbers are. The last time I looked, there's about 65 million carbon credits generated in Alberta, which have probably generated well in excess of $2 billion for the project proponents that have got engaged in the market and created those credits. So what I say to people when I think about the Alberta context and the credits we've developed there, sometimes I feel a little bit like Robin Hood, because every dollar we generate through the sale of a credit is a dollar the government doesn't get. So understand how important that is within the context of BC, where we have a carbon tax in place. So how widespread are these global pricing initiatives? So this is a map of the World Bank's 2021 or 2022 statement trends of global carbon markets. If you really like reading long documents, download it. But you can see that there's a variety of carbon pricing instruments in place in various parts of the world, including China. People are always surprised at China, New Zealand, Argentina, Africa, lots of countries that are putting these mechanisms in place to price carbon. What's really interesting is Australia, which isn't on the map, because Australia has a emission reduction fund where the government of Australia buys carbon credits from proponents that are reducing GHG emissions. And they also have a secondary market as well. So these carbon taxes and emissions trading systems are spreading in various parts of the world. And there's areas like Brazil, which is on the fence. Do we get in? Do we not get in? We'll see what happens with the election at the end of the month, because that may lead into that. So what does this really mean, though? What are the hard numbers? $84 billion USD was collected last year by governments that put in a carbon pricing initiative. And look at Canada and British Columbia. And look at the portion of the pie they make up of that. 28 billion US in tax. Canada and BC, that's a pretty significant amount of cash that's flowing to our provincial and federal government. I think it's important to actually understand that, to see what's going on. And you look at the European Union and everybody else. So these initiatives are not necessarily going to go away. And it's not that they're a bad thing, they're just a different thing. Yeah, you have a question?
Yeah, I'm just wondering how much, like, all these revenues that are going to Canada and British Columbia are actually lowering the greenhouse gases in Canada and British Columbia.
I'm not going to go there. I don't know. How do you measure it? Right? I'd suggest that the recent fuel increases from, in part from the war in Ukraine have far more impact than on a price per liter than the carbon tax. So I can't speak to that, but many economists can and will speak to that. So anyways, that's sort of the state of where we're at in this carbon pricing initiative. Any other questions I should address?
There's a couple in the chat. So how do emerging economies like India and to some degree China play in the future of carbon credits? Are they buying into a global carbon market?
Let's save that for a bit and come back. Okay, all right, let's keep going. So let's talk about BC a little bit more in detail. So BC has implemented a carbon tax. That means that every time you buy a liter of fuel, when you, well, there's not really coal here anymore, but if you're using propane, you're paying a tax. And the companies that operate in BC are paying a tax. If you fill up your plane, if you're in Air Canada and you fill up your plane with fuel here, you're paying that tax, right? That cash is going to the BC government. Where it goes, I don't know. I don't know if it goes to general revenues or somewhere else, but it's going to the government. BC does not have an emissions trading system, which means BC has no carbon market that allows big emitters, Fortis, TransCanada, and so on and so forth, to buy a carbon credit and retire it against their obligation to the government rather than pay the tax, which means there's no financial motive for them to step up and buy credits in the market because effectively they're paying the tax and now they're buying credits. I'm going to put a bucket around this and say that the British Columbia government buys credits under their own program to make the government carbon neutral, but they're a single buyer. I have no idea how they do price transparency. And when you're selling to one organization, I think you pay what they're going to say they're going to pay, but I don't know because I don't play in that market. It doesn't, it's a very little interest. So we don't have this mechanism that really encourages large companies to step up and buy these credits. However, I will go out and say companies like Canadian Mountain Holidays, the heli skiing company, they do both. They're paying the carbon tax and they're buying carbon credits. And in fact, I know they've tried to work with one of their First Nation partners to generate credits from that nation because they're a very charismatic credit that they'd like to buy. But that really hasn't gone anywhere just yet. So let's take a look at the other side of the coin, which is voluntary markets or non-government action. And this is where it gets more interesting. So voluntary markets are private sector initiatives. And voluntary markets are created when an organization gets together and creates a registry, such as the Global Carbon Council out of the Middle East, the American Carbon Registry, Climate Action Reserve, the Verified Carbon Standard, and the Gold Standard. These are registry bodies that have put in rules and regulations that allow an organization or an individual to implement a project that will reduce greenhouse gas emissions or reduce their emissions of those gases or remove greenhouse gases out of the atmosphere. And when people do that, they're able to take those emission reductions or emission removals and convert those to a voluntary carbon credit that then can be sold anywhere, typically. So these voluntary carbon markets are growing in scale, as you'll see in a minute. And we're seeing thousands, literally thousands of the world's biggest companies line up to make net zero commitments. We're seeing banks join things like the Net Zero Banking Alliance, which had, I think, 60% of the global money in their systems committing to net zero finance. We saw the Glasgow Financial Alliance. come out in COP of last year with companies stepping up saying we have the money to, we're committing to this net zero finance. So these voluntary actions are driving demand for credits. They're driving demand for high quality credits. And again, when you buy a carbon credit or when you sell a voluntary carbon credit, it's not resulting in a direct source of revenue to the government. Again, important to understand that the difference between the two. So in terms of the voluntary market, this is a graph from Ecosystem Marketplace, which is really well worth signing up to get the information, because all I'm really going to do now is tell you what people have told me. But what you have on the left side of the graph in billions of dollars is the cumulative value of disclosed, voluntarily disclosed carbon trades, the value of those trades from pre-2005 to 2021. So the cumulative value is just touching or just over $8 billion. But in 2021, which is on the scale on the right side of the graph, is the actual dollar value on an annual basis. So in 2021, we saw a fourfold increase in the value of transactions reported in the voluntary carbon market. And it touched just over $2 billion. So last year, governments collected $84 billion in revenue. And the voluntary market generated, that we know of, that's disclosed, just over $2 billion worth of transactions. So there's a big difference between the two. But the demand for these credits is growing. And what's also happening as we'll go along is we see that there's a lot of different credit types. There's over 170 different types of credits that can be generated now in the voluntary markets. And up on the sort of the left quadrant, top left quadrant, you have forestry and land use, everything from urban forestry, agroforestry, avoided deforestation, blue carbon, also I think important for First Nations that are on the coast, blue carbon initiatives, lots of work being done in the idea of growing and sequestering carbon through seaweed growth, a whole host of different things. But also, there's a whole series of other types of carbon credits that a First Nation may be able to generate from activities that are well within their control, are not tied to the land, which means that they have more capacity or more ability to take legal ownership of those emission reductions and convert them to credits. Lots going on in the space. The other thing that I think is important is to understand is how credits are being sold. And I really don't want to get into any detail in this slide, but this is important because at the very top, bilateral developer and buyer agreements are the majority of sort of the preferred way of brokering credits. But now we have cryptocurrency companies coming into the market saying, we're going to convert your credit into a cryptocurrency and we're going to sell that. You've got auctions, you've got futures contracts. It's getting complicated, right? And this piece is important to understand, not because you need to do anything about it right now, but because it's something that you're going to need to learn about, or someone you're going to need to. When we deal with money, we have a trusted financial advisor, right? In fact, in Australia, which I'll talk about in a little bit from a First Nations perspective, in Australia, you can't buy or sell a credit unless you're an accredited, unless you have an AFSL, right, which is a financial services license that's issued by the government. Here, that's not the case, right? So again, this is about learning about what you're going to need to do. So market evolution. I don't even know what the time is. I just talk until I get told to shut up. So just let me see here. Carbon market evolution. If any of you are familiar with sort of critical thought theory, we talk about thinking or critical thought through the areas of divergent, emergent, and convergent thought. We apply that to markets right now, where we had a divergent market, divergent carbon market as it was evolving many years ago. And right now we're really in what we would call this emergent state. So what we see right now are an ever increasing number of markets, an increasing number of protocols, in more opportunities for investment, more and more people stepping into the space saying they're going to develop carbon credits. And what this means is we have at this juncture in the market, a lot of people doing a lot of things in the voluntary market with no unified body, accredited unified body that's overseeing what's going on in the market. So there's groups like the IC, the Integrity Council for the Voluntary Carbon Market, the ICVCM, too many acronyms, which is now trying to think about how do we go about creating core carbon principles to guide credit development, carbon credit development. You've got self-proclaimed groups like Silvera that's saying we can rate your credits anywhere in the world and apply a rating to those credits. There are other groups that are doing that as well, and those credit ratings are starting to impact buyers' decisions. Am I getting a high quality credit? So this gets down into this idea of what do we need to do to create these high quality credits. So not only do we see more people getting into this space, more actors getting into the space, but we see the market structures themselves becoming more complicated. 3 years ago or 2 years ago, if I was sitting here and I said, well, let's talk about carbon markets, I'd say there's two: a voluntary carbon market and a compliance market. Compliance market similar to Alberta, where the Alberta government allows a company to buy a credit, retire it to meet a compliance obligation. And then the voluntary carbon market, where people can go buy voluntary carbon markets. Today, it's very, very different. It's nuanced and it's complicated, but it is, well, it's nuanced and complicated. I don't know if that's the same thing, but it's changing. So what do we have today? So current market structures today, we can have a subnational compliance market. So if British Columbia puts in a carbon program, we have a subnational carbon market. In Canada, particularly, we have a national compliance program. So the federal government of Canada, not only do they have their federal carbon price, but they have the output-based pricing system, which is a carbon market managed by the federal government. What's particularly interesting is that under that federal government market, specific types of credits that are generated in Alberta can be used or fungible into the federal government's marketplace. So we can transfer credit, generate a credit in the Alberta offset system, and it can be used to meet an obligation in another part of Canada. So we now have the opportunity to flow credits from Alberta into the federal government. But around this national compliance, we have our voluntary market. Technically, there's nothing stopping a project developer anywhere in Canada from generating a credit in a national or subnational market and selling that to an international buyer who wants to use it voluntarily. We don't see it necessarily happening, but it could be done. And then surrounding the voluntary market, we have industry compliance markets. So the prime example of this is an organization called CORSIA, which is the carbon, well, it's actually ICAO, the International Civil Aviation Organization, has created a carbon market for international air travel called CORSIA, the Carbon Offset Reduction Scheme for International Aviation. And what that group is trying to do is make sure that all increasing emissions in aviation post COVID kind of messed it up a little bit, but I think it was initially post 2020 was going to be carbon neutral, which meant that it was forecast out that they would need about 7.3 billion emission reductions over, I think, 20 years to meet that obligation. So countries participate in the program, and when a plane is flying from one country that's participating in the program to another country that is participating in the program, they're obligated really under this CORSIA compliance obligation to report their emissions and offset their emissions or reduce their emissions. Now, what's interesting is that ICAO, right, and the CORSIA allow specific credit types from the voluntary market to be used for compliance, right? So now what we see is voluntary credits now moving into these pseudo compliance markets, right? Or potentially going into a compliance market. So it's not so easy anymore to understand what's going on. And then surrounding it all is Article 6 of the Paris Agreement. So if you've been following carbon markets and following what's going on at the COPs, last year in Glasgow, rules were agreed to around Article 6 of the Paris Agreement, which sets up the foundation to allow credits to be traded internationally, governed from at the country level, so that countries themselves can meet their own emission reduction commitments. What this means is that the opportunity in theory, well, actually it does exist, but you need governments to sign off on it. I could take a credit generated from the methane abatement project done in Alberta or northeastern British Columbia. And if I got a letter of authorization from the federal government of Canada, I could sell that emission reduction into Europe. And the prices there used to be in excess of 100 euros a ton. In other words, we could have had cash flow coming in from Europe to fund emission reduction projects in Canada to accelerate the reduction of methane emissions in the oil and gas sector. But to do that, I need the federal government on board. So what we have now and what we're going to face going forward is this really interesting issue of what are we going to do? What markets are we going to play in? And so when we think about creating carbon credits for First Nation initiatives, where are they going to go? And who are you going to sell them to? And how does this organization lobby, cajole, beat, whatever you want to call it, the government of BC into a position that allows the First Nations the ability to participate in some or all of these markets? And that's really what we're talking about. I'm going to skip this. I'll go to this slide here. Actually, this is a slide also out of the World Bank report. It shows carbon credit issuances by various structures. So don't necessarily try to read it. We'll just flip it here to a bigger one. So you can see up at the top, the American Carbon Registry, Climate Action Reserve, Verified Carbon Standard, and these are all voluntary market mechanisms. And you can see that the VCS issued almost 300 or 295 million carbon credits, right, last year. The Clean Development Mechanism, then you get down to Alberta, the Australia Emission Reduction Fund, California, and then the rest of those in that slide. If you grab that report, it goes through what's going on in various countries around the world. The point of this is that there's a lot of credits that are being generated in these voluntary markets. And again, coming back to British Columbia in this group, back in 2011, the FCOP protocol, that's the first time it hit Vera. They actually were doing the right thing. They wanted to have the protocol work through Vera, the VCS. I use them interchangeably. 2011, but we don't have any credits yet. Right.
Good question here.
Sure.
So a couple of questions, sort of coming back to this gentleman's points. Sorry, Charles. Around, so you're saying that you've been involved in the carbon credit market for about 14 years now, and coming back to this question around how effectively are carbon credits actually addressing our greenhouse gas emissions? So you're making a really compelling argument for the economics of this, but what's the so this is intended to be nature-based solutions, but what you're presenting are essentially kind of market-based solutions. Looking at, if anyone looks outside at this moment, Vancouver has the worst air quality in the world right now. We're in a drought level 5. We need to actually address the climate that's happening, and no one's going to benefit from a $130 trillion profit on a dead planet. And so we need to be able to answer the question that this gentleman raised in terms of how much reductions can we actually anticipate from what you're proposing?
So first of all, at this juncture, I'm not proposing anything specifically related to a credit volume, but I think what you're really getting at is, what is it that we can expect to have happen if we have all these credits or these emission reductions generated in BC? And I think Krista had the volumes yesterday. Was she here? No.
Yeah.
Yeah. What were the total volumes over 20 years?
180,000 per year.
180,000 tons per year, so not a lot.
850,000.
850.
Plus another,
That's another zero, 850,000.
so 850,000 tons of CO2e reductions a year. So is it enough? No. Is it something? Yes. Right? I think it's this issue of, when I think about carbon markets, to be clear, when I think about carbon markets and the trading of carbon credits and the generation of carbon credits, my own personal belief is these markets are used to incent positive behavioral change that will result in long-term emission reductions, right? When we get into the economics of, is a carbon credit a better mechanism to use than, say, a carbon tax, I leave that to the economists and the statisticians to go through and solve that question. So I'm not answering your question because I don't know if I really am in a position to answer it accurately. What I do believe, though, is that carbon markets right now are an area where we're seeing a lot of capital looking, and if we can use these markets to drive down emissions or increase removals, it's a step in the right direction. It's one of the tools in the toolkit to address climate change. Does that help or confuse? Or are you just saying I'm not answering the question and I'm being like a politician?
Yeah, I mean, absolutely. You clearly don't have sort of the data, I think, to back up the argument that the carbon markets is an effective tool for actually reducing emissions, or rather justifying sort of business as usual and sort of the status quo of industries to continue to contribute to a rising carbon emissions. I think that's the challenge. But I think the other piece, if this is really, instead of incorporating Indigenous perspectives into the protocols, I think one of the key pieces from Indigenous peoples as we look at nature-based solutions is there's no other solution aside from just stopping fossil fuel emissions. That's like step number one. And when you're talking about the long-term sort of emissions reductions, there is no long-term. We're at a very critical juncture, and so there is no long-term.
Well,
there's a need to reduce right now, yesterday.
Sure, I don't disagree. There's an absolute need to reduce right now. Well, I guess the question comes down is who's got the authority to put the brakes on everything? I don't. I can have a circle of it. There's a circle where I can influence what I think is good positive behavior, right? Whether or not that's walking, biking, right? It's not buying single-use plastics, reducing your own emissions. I don't have the authority to say to the oil and gas sector, you're shutting down today. So I'm not sure how, I appreciate what you're saying. I appreciate the fact that, yeah, we're all deep stuff, right? Very, very shortly if we don't get our act together, right? Which comes down to the fact that, you know, I can come back and say, well, it's been, what, 11 years since the FCOP protocol was first proposed or first published, and we still have no credits out of that. There's lots of delay in this space, and there's a lot more delay around should we, could we, what's best, as opposed to let's do everything that's possible to drive emission reductions down. I personally believe that incenting change and incenting emission reductions is a way to do that. I will say that yes, you can go through and you could just simply regulate, or a government could choose to regulate. I'm not in government. I can't do that.
So we got some more questions. I think the fundamental question here, which some of us are trying to get our minds around, is how do credits reduce emissions?
That's how do credits reduce emissions?
Yeah, I know. I want to go ahead.
Thanks. Should I grab the mic or?
Right here.
Okay. Thanks. I think there's another question on your left over there as well.
Yeah.
Hi, everyone. So I think just to comment a little bit on the last exchange, I think like we're at a point where there is an immediate need for reductions that realistically oil and gas is not going to shut down tomorrow. So where are we in the meantime? Supply chains continue to require inputs and outputs, and there's going to be unavoidable emissions. And the principle of the offsetting industry, which has not always been followed in the past, but is really one of the fundamental principles of offsetting is that you're supposed to reduce as much as you can within your own supply chain before using offsets to mitigate the risks that are sort of unavoidable. And so that's kind of where offsets come into play. And in many cases, there's good reasons for using them because it's very expensive to fund nature conservation without any sort of income. We are, I guess you could say, we fund different projects, and we've seen from project developers that, let's say, an organization wanted to conserve their land, and they did, and then they just started running out of money because it's basically a money pit, putting money into conservation forever. And so carbon credits are then used to fund the conservation or the restoration programs, which otherwise would simply be unaffordable. So that's kind of where it comes from. And, I guess the principle behind this from an economics perspective is that nature is basically valid as zero. And that's why it just considered it's a sink. And so if everybody is able to make some sort of profit in quotes or some sort of returns off of it, then it makes it worthwhile for everybody to conserve nature, and it also achieves something positive while you're doing that. So that's kind of that's a principle. I don't know if that helps, but I think that economically the idea of doing some of these offsets also is that they are like, how to say, the marginally next lowest cost item on the abatement curve, which is to say that they are cost effective for reducing emissions. And so for nature-based offsets, I don't have the numbers offhand, but I believe that nature-based offsets can provide like 1/3 or some large amount of low cost abatement and emissions reductions needed by 2030. So that's kind of where that comes in. I will stop here and
Thanks.
hand back.
You want to introduce yourself?
Oh, sorry, yes, I should do that. This is Nazia, I'm from Carbon Streaming. And if I will stop there, if you would like more context, I'm happy to give it a little later.
Okay, thank you. Okay, well, is everybody awake now? Go ahead. Can you pass that down?
Thanks. I'm Mary Kate Craig. I'm from the Conservation Through Reconciliation Partnership, and I'm working with Stephen Nita. So a lot of the work that we've been doing is really looking at this conservation financing and how do you create an economic heart inside of IPCAs. And carbon offsets could become one part of this, and this is really what this is pointing to. It's one potential tool, but carbon offsets are not the solution. What we saw yesterday in the morning, that's the solution. That's what we're building. It's just really asking the question, might this mechanism of carbon markets become one way that we might finance what is actually the solution? But carbon offsets are a band-aid. They're designed to go away. It's part of a transition plan. They are not the solution. I think that's what you're pointing to. But they could become part of the solution just as a way to fund what the solution actually is. So
Thanks. So just let me remind us of what's our purpose here. This is complicated, and of course we're all very concerned about what's going on with climate, and that just adds a bunch of intense energy into the conversation. What we're hoping to achieve here is for the nations that are interested in nature-based solutions or IPCAs to develop a better understanding of what's going on with respect to carbon markets, because they're changing and choices are being made about them, whether or not you want to participate in them or you agree with them or not. We're not trying to convince anyone whether they're a good thing or a bad thing right now. What we're trying to do is understand what's going on. And Al's just trying to help us get a sense of the global picture before we dive into Canada, which is what we're going to do after the break. And as predicted, this is complicated. So we have an introduction, which is helpful. And the emotion and passion around it is a reflection of that there's real issues outside that window that we all care about. And we need to understand what's going on in this carbon market and how can it actually make a difference to what's going on outside the window, if it can. So we only have a few more minutes.
Let me jump to my last question.
Yeah.
All right. And I'll jump to the last slide because I think it's sets up maybe for what David and Chris are gonna mention later, so.
And after we get into David and Chris's presentation, towards the end of the morning, we're gonna be able to just throw it wide open, okay? So that if you didn't feel like you could say something, you could, we wanna make sure everybody feels like they're getting heard here, okay?
Yeah, so
Go ahead.
I'm gonna go and skip over what we talked about offset criteria, which is what people know about real, additional, permanent, quantifiable, and enforceable, and go right to what I consider to be the barrier that First Nations face right now, which is enforceability, specifically offset ownership. Now, when we think about the Great Bear Rainforest, they were able to enter into an agreement with the government that allows them to generate credits and then share or take the proceeds of those credits as their own and sell them into the market. I think one of the, I forget which nation has the recent court or recent treaty settlement where they now have title to their land. Niska, thank you. Have title to the land, which because they have title to the land, it would give them that clarity of ownership to be able to undertake activities to generate credits on the land and sell them into the voluntary market today. But for the other nations that don't have that legal right, they don't have clarity of ownership around their credits. And until they get clarity of ownership from credits being developed on Crown land, you're unlikely to be able anyone buy them, because there's a risk of ownership issues. And so what the government needs to do, and the only thing the government needs to do, is figure out how to, the nations, in conjunction with the nations, figure out how to transfer ownership of those atmosphere through an atmosphere sharing benefit agreement that gives them the right to those credits. Now, I've heard people from government say, well, we need to change this act, or we need to change this law, or we need to change this regulation, and that may be very, very true. But I don't know if those statements are indicative of the real problem, or they're simply the excuse for not getting it done, right? But functionally, I would say my own perspective, and happy to be proven wrong on this, is that I think this issue around offset ownership is the one thing that the FNCI has to work hard to solve with the government, because the protocols to generate credits already exist in the voluntary market. We don't need FCOP, we just need ownership. And with ownership, we have market access.
So, okay, there is a question that's global in its orientation. I think what you just said and the conversation that's going to flow from that will fit into the discussion we have later in the morning, because that's what we're dealing with here in British Columbia. The question was from Doug Casimel from the Salatin First Nation. How do emerging economies like India and to some degree China play in future carbon in the future of carbon credits? Are they buying into a global carbon market?
China has their emissions trading system in place, and for years China was buying credits generated out of the CDM or CERs.
What's that?
They were buying credits out of the Clean Development Mechanism. China was. So China's been engaged in the space. India, I can't speak knowledgeably on India right now because I haven't followed it, but I know there's some groups in India that are looking at generating significant volumes of credits in the voluntary market through methane abatement, through rice cultivation techniques, so another nature-based solution. There are also some forestry, lots of renewable energy. But I think those markets will, I would hope that they'll become bigger, more transparent, so we can understand more of what's going on. And I think for indigenous people around the world, be it in Africa, South America, Australia, Indonesia, everywhere, the roles that they're taking on in carbon markets is increasing. And the fact of the matter is that in places like Australia, if I was on land, which is traditional First Nations land, I need their consent, native title consent to generate credits on that land if it's a pastoral land. On RED projects, around the world. Community engagement, local stakeholder consultation, community benefit sharing agreements are of critical importance to getting those projects across the line. So we're seeing more money flowing into First Nations communities or Indigenous communities in places like Africa, be it in Kenya or the DRC, in Cambodia, all around the world, right, by participating in these projects. So by project developers and the project proponents being required to engage with First Nations and share the benefits and have them at the table as those projects are created. And this is a good thing.
You might just want to tell people what RED stands for.
Oh, sorry, reduced deforestation and degradation. So don't cut down the trees. In simple terms.
We need to take a break. It's a horrible thing to do. And it's a great discussion people are having. If you could just let me know, we can take a break now. Let me know the kind of question you want to ask or the issue you want more discussion on, so that I can try and weave that into the discussion. I can try and weave that into the discussion that follows the next presentations. The next presentations focus on what's actually going on in Canada. Let's make sure we all understand that. And what's going on in British Columbia, what might go on in British Columbia, because everything's changing. So we just get our minds around that, and then we can bring these issues back to the discussion after we get those presentations. Is that okay? All right, let's take a break. Copies out there.
Oh, yeah, oh, I did that.
Just say that.
I just emailed, I mentioned, yeah.
while we get started. So David has taken on the Herculean task of trying to explain to us how the federal system works and the different provincial systems in Canada right now. And hopefully, at least all of us will have the same understanding of the output-based pricing system at the end of this conversation. That would be amazing. And there's a lot of other things that we could all potentially understand together, but we'll see. So David, thanks very much for taking this on, and the floor is yours.
Okay, thanks. I'm not sure if the mic, am I close enough?
That's working.
Perfect, okay, great. Yeah, so I'll apologize in advance for this presentation. This presentation is very dense. It is very technical, and I know that. It's nerdy, I like that, and I'm excited to give this presentation, but it will be complicated. So if we save questions to the end, that would be great. We got lots of time to ask questions, and we'll dive right into it. So what I'll do is give a little bit of introduction about me, like who is this overweight white guy in his 50s talking to you about carbon credits and regulatory systems. I'll give a little bit of introduction about finite carbon and what we do. Then I'm going to speak to the greenhouse gas regulatory landscape broadly in Canada and how it works, which sort of pulls from Alistair's description of how, you know, the federal system nests on top of the provincial systems and those sort of subnational, national level pieces. It's a bit more complicated than that, as you can imagine, and I'll try and do my best to explain that. I'll explain in a little bit more detail about how greenhouse gas regulation works in BC and how the money cycles through. And then we're going to pose a hypothetical, because one of the things that, you know, is top of mind in this document is the first action you want to do is create a carbon market. And so when Alex and I were talking about the potential for this feels like the star chamber. Explode, I got a little bit of time. There we go. Yeah, so Alex asked me to pose the hypothetical. How could we get regulatory pricing for forestry offset credits in BC? How would that actually work? And so I'm going to propose that we look at that, and it's a hypothetical situation. But it is workable. And then I'll talk about the interplay between how these systems work. And the system we're talking about is an OBPS, an output-based performance standard system. And I'll get into the details of what that means, because that's an important concept. So first off, well, who's Dave? Well, here's Dave about 20 years ago, looking a little bit more svelte. I'm a forester, professional forester. I'm registered in Ontario, Saskatchewan, and Alberta. I've spent a decade or so with the Saskatchewan government looking at silviculture and forest policy. About 4.5 years ago, start of 2017, I was hired by the climate change branch in Saskatchewan to develop their regulatory program. So put together the acts and regulations to implement their climate strategy, which was one of these regulatory systems primarily based on the Alberta piece. So I do know the details on how these things work, and more importantly, the nuances about how these things can be manipulated. So what are the levers that you can pull that can increase demand into the system? Finally, about 1.5 years ago, maybe a bit longer now, I joined Finite Carbon. I got lured away from government to this crazy world of carbon. Yeah, it's been great. A little bit about Finite Carbon. We specialize only in forest carbon offsets. That's all we do. And we have developed more of those than anyone else anywhere, really. A big part of our business is working with Indigenous landowners. And we have sold over $500 million worth of credits that has gone back to those communities. So this is not a new business. The company's been around since 2009. So it's new to Canada. And because Canada's developing this new approach to carbon crediting. It's sort of evolving at a different rate than it has in the States. We have offices across the US and of course now in Canada as well. And we're foresters primarily. Okay, so let's jump into some of the details. And again, I apologize for the dense piece of it. There's a couple of concepts that you need to keep in mind when thinking about regulatory structures in Canada. The first one is what's known as the federal backstop. This is something that you probably heard the term, but what actually is the federal backstop? Well, it's a law that the federal government passed, Greenhouse Gas Pollution Pricing Act. And this law is applied if a province doesn't meet what's called the federal benchmark. So there's a list of things that every province needs to do in order to not be regulated by the federal government. And that's where, you know, we think about that national market. There really isn't a national offset piece. It's really only if a province doesn't meet the benchmark is there a national program imposed. And so again, there's a lot of nuance there as well. But the elements of the federal benchmark are this. You have to have a carbon price. That carbon price schedule is published. It's $50 this year. It's increasing by $15 every year until 2030, where it hits $170. That is a requirement of your program. You have to have what's known as common scope. So if the federal program covers, for example, coal facilities, then the provincial system has to cover coal facilities. Or if it covers potash mining, then the provincial system has to cover potash mining. The federal act does not cover every sector. It covers heavy industry. And we'll talk and go into the detail about what those sectors look like. Another thing is you have to maintain a price signal. So that carbon price, that $50 carbon price this year, has to apply throughout the system. The idea is that it drives that innovation. So the price goes up, it gets more and more expensive for industry to pollute. And so that drives change. And so it's very important that you can't, for example, and we'll get into details on this, sell your credits for much less than the going carbon price, because that'll draw that stringency away from the industry. There is something called EITE. We're not going to dive into that. It's energy intensive, trade exposed industries. So if you're an industry that exports primarily all of its material, and I'll use one that doesn't exist here, the potash industry in Saskatchewan, for example, you know, they ship all over the planet. They compete against other potash producing countries like in Belarus. Belarus doesn't have the same carbon regulations, so it puts the potash industry in Canada at a disadvantage. There are mechanisms within these systems to reduce the requirements of the piece so that you're able to maintain that competitive advantage across borders. Finally, offsets is one of the pieces that these systems have. You have to have real additional credits that meet all the requirements of the federal standard, and public reporting. All of this has to be reported publicly. So that's the federal benchmark. So if you're a province that isn't doing that, then you can have the federal government impose that onto your province. And there are several examples. I don't think my cursor works here. Oh yeah, it does. Look at that. In Alberta and Saskatchewan, you probably have heard, you know, the governments there don't like the carbon tax on fuels. Well, and they fought very hard against the federal government, took them to the Supreme Court, lost. But the federal government said, okay, you're not going to impose a carbon tax on your province, we'll do it for you. So in Alberta and Saskatchewan, the federal government imposes a carbon tax on fuels for people that are buying fuel. But they did say, you know what, you have a regulatory system for your industry that does meet the federal standard. So the province regulates heavy industry and has an offset system that works internally within the province. But if you're someone like me, I live in Edmonton, buying fuel for your house, you pay the carbon tax just like anyone else. So it's a bit different how it works. And what these systems have in common pretty much across the country, with the exception of Quebec and currently Nova Scotia, but that's about to change, is that there are all these what are known as an output-based performance standards program or system. And we're going to dive into how those work in a bit of detail, because it's important to understand how the industrial regulation that requires emission reductions drives offset demand and into the system, and how that monetary piece works and how that price signal works. Okay, we'll talk a little bit about protocols, and this is my map, so don't look at the coloring. Look at the coloring in the last map. But you know, there's protocols in development for both the regulatory systems in provinces and at the federal level that are in development. BC, Warren, there's an FCOP. It's been in development for a while. Hopefully it'll be released soon, 2022. Alberta, there's a protocol being in development right then. Finite Carbon's writing that. That's one that I work on. Hopefully that'll be available in early 2023. The Saskatchewan government has decided not to go with a regulatory program. Those voluntary offsets are going to be in their system, and we'll speak to that. Manitoba, they have had the backstop imposed on them, so the federal system applies in Manitoba. Ontario, they have their own program, but doesn't have offsets, and you can go across the country. What I'm painting the picture here, though, is it's different right across. Every province is different. Every system is different. There's a lot of complexity here and a lot of things in flux. So it's a very difficult time for a nation to make a decision on, should I be developing a project to this protocol or that protocol? It's hard to say because everything is in so much flux. Okay, so how does it work in BC? Well, it's very simple. In BC, it applies a carbon tax to all fossil fuels, whether you're an industry or you're, me putting fuel in my car. Everyone pays it. It's very simple to administer. You just make sure that it's charged at the pump. And if you're an industrial user, your bulk supplier charges at the pump. It's just like charging GST. And it covers 70% of all provincial GHG emissions are now priced under this carbon price. The other 30% are things like landfill methane, which isn't considered a fossil fuel emission. And so it's not. There are some exemptions that are applying the system for agriculture, First Nations, rail, airlines that are flying between countries. And the funds actually are recycled back to the economy through different programs. So individuals will get a climate action tax credit. You get that, I don't know, annually, quarterly, something like that. And then for industry, there are these industrial incentive programs. To speak to Alistair's point, the government takes the money in, but they have control on how the money goes back out. So a feature of these systems is any money that you collect does get recycled in the system. It's the control on how that happens is done by government. So it's a policy choice, which is different from an OBPS, and we'll jump into that in a moment. As you can see, carbon price today is $50, 73 more days until it hits 65. So let's look at the picture in BC and who are the large emitters? Who are these companies emitting large amounts of GHGs that could possibly be subjected to an OBPS type system? Well, fortunately, they're required to report this already. So I just went to the National Greenhouse Gas Reporting Program and downloaded the information for BC, and here you can hear your top 5. So you've got a pipeline, you've got an aluminum plant, you've got a couple of cement factories, and you got a coal mining plant. And those are the top 5, which total, if you add them all up from all the different sectors and all the different emitters, it's about 16 million tons are emitted. It's a bit less this year than it was in 2018. I wanted to see what the difference. 2019 is probably a bad year to look at with the pandemic and the change in the economy, but it didn't really change much from 2018 to 2020. That's the latest set of data, but to look at the numbers, the emissions have gone down by 200,000 or 300,000 tons over that period from these facilities. So what are the range of these facilities? Well, in the reporting program, any facility that's over 10,000 tons has to report by law to the federal government, and provinces have their own requirements. For example, in Saskatchewan, what we said was you have to report what your emissions are because that's a fundamental piece of the puzzle. You gotta know who's emitting what. But we just said, if you're reporting to the federal government, that's okay. We'll get the data from us. So you just only have to do reporting once. Anyway, there's a range of facilities out there. Very few very large ones, as you can see on the graph on the left, and a whole pile of them in sort of that 20 to 10 or 50 to 10 thousand tons per year. There are very few under 10,000 tons, but that's sort of a misnomer because you're not actually required to report anything under 10,000, but anyone can. So, you know, Alex, if you wanted to report your tons to the greenhouse gas reporting program, there's nothing actually stopping you. But you'd kind of be in that little cluster. So total emissions by range, however, you can see that the biggest cluster of emissions are sort of in that 100,000 tons and up is who are the big emitters. So there's not that many of them, but they are the biggest ones. And that's what these programs target. And OBPS targets these emissions. Point being is that if you lowered your threshold for a program below 10,000 tons, you really wouldn't capture that many more emissions. So there's sort of a natural cutoff there. Okay, so how does it work for an OBPS? And this is where it starts to get complicated. Remember, in the BC system, everyone gets the tax. Whether you're an industry or whether you're an individual, everyone pays the tax. In an OBPS, an output-based performance standard system, everyone pays the tax unless you are regulated under this system. If you're regulated under this system, then you can get essentially what's a GST exemption. It's called a fuels exemption from the CRA. You take that to your bulk dealer and you don't get charged the tax on your fuels. But you are now subjected to your emissions performance standards. And that's where this system now takes place. These performance standards can be either, they're sectoral. So, you know, there'll be standards for the mining groups, there'll be standards for oil and gas, there'll be standards for all the different types. If you go to the Greenhouse Gas Pollution Pricing Act, you can see them all, they're all listed there. But you can apply them differently. So they can either be applied by facility, and so you have a percentage that you need to reduce off of for each facility, or you can do it by sector. And so what I've got illustrated here is the sector approach. So you've got 3 facilities, and it's based on your emissions intensity. So how efficient you use your fuel. The more efficient you use your fuel, the better off you are as a facility. So it's trying to drive that efficient use of fuels through the system. And you can see 3 facilities here that have different efficiencies. Facility A, it might be hard to read on the screen, has a 0.3, facility B has a 0.15 emission intensity, and facility C has a 0.4. And you can see that one is above the average, that's that one on the far right, one is way below the average, and that's the one in the middle, and one's right on the average. So what a sectoral approach will do, and this is the way the federal system works, is they'll say, okay, now everyone has to reduce their emissions intensity by 20%. And then every year after that, they have what's known as a tightening rate. So 2% increase in that efficiency over time. So in 2023, it's now 22%. In 2024, it's now 24%. And that'll drive it down to, now over the next 8 years, to a 36% reduction in your emissions intensity over time. So you can see some facilities are the ones on the right, they're in trouble already. They owe what is now known as a compliance obligation. Others, the one in the middle, they're probably sitting pretty good. They're a very efficient mill. They may not have to pay any obligation, and they may actually be able to earn what are known as performance credits. And I'll jump to that in the next piece. The other way of applying that is the way it's applied in the Alberta system. So we'll jump to that now. So compliance obligations are generated when a facility either emits too much from what they're required to lower their emissions intensity to. And if that is the case, then they have some options. What they can do is they can pay money into a technology fund, or they can they can use what are known as these emission performance credits. Let's say that facility was super efficient in the past year, but as that tightening rate goes down, they were able to generate some credits. You can use those in the system, or you can buy carbon offsets. And so that's where our conversation now comes in. Carbon offsets are a feature of what's known as an OBPS type system. It's a way of companies making a choice about how they're going to push their emissions compliance and how that works. How are they going to pay for polluting, essentially? And one way they can do it is to pay into a fund. Another way is to buy carbon offsets that now drive emissions somewhere else. So those are the three compliance tools that an industry can use. And the difference here between the provincial system in BC and a system like this is that industry actually has control on how they want to drive their purchases, as opposed to government collecting that and then recycling it back and saying, well, you can have the money back, but it's going to be in this way or this way. So industry has the choice of how they're going to make change in their system. And as that price goes up, those stringencies get tighter and tighter. It gets really expensive for a facility not to make change. And that's how the system works. It's an economic approach to pricing carbon that will drive change. And I'll give an example that we always used in Saskatchewan is the Meadow Lake pulp mill. So the Meadow Lake pulp mill has a huge amount of energy use, mainly in its dryer. So it dries the pulp and then sells the pulp, right? So you got to extract the water. That dryer uses a large amount of energy. And so when talking to the pulp folks, they said, well, we can make a change. Like we can put in a much more efficient dryer, but it costs like 60 million bucks, right? So what a carbon price does, it makes it so expensive in time that at some point it's going to be cheaper for them to make that investment and lower their emissions. So what you find in a facility is not a gradual decline in your emissions over time. What you find is sort of a stepwise approach. As the costs of compliance get so high, industry will make these strategic investments that make it cheaper for them. So that's how the carbon price drives change in the system. Okay, so here's some of the nuance though. In Alberta, for example, how you pay your compliance obligation can vary. So in Alberta, you can only use 60% of your obligation can be used through carbon credits. 40% has to go into the fund. Different provinces can pull different levers. You could say 100% of that compliance obligation could be satisfied through an offset. And that, of course, would drive offset demand. Some provinces, you can't use offsets at all. Saskatchewan's one, Ontario's another. It's just not a feature of the program. You can see that little windmill over there. In Ontario, it'd just be missing. You wouldn't have that option. So the question is, if BC were to do this, what would BC's policy be? Don't know. That's a choice, right? That's a policy choice. And as a group that's interested in creating demand for carbon offsets, that's a place that you can argue for. We want to see offsets used more broadly in the system than, say, Alberta is. But that's something you need to think about when you're talking to governments in creating that demand. Okay, so we had a question earlier about what is the effect of these policies on actual emissions. And so there are actually some studies for BC that actually illustrate that. I don't have them with me, so I can't really answer that question, but there are scientific studies that have shown that the carbon price has resulted in X emission reductions over this period of time. What I'm illustrating here is what the federal government sees as the result of regulatory change and carbon pricing over the period 2019 to 2030. And you can see in the chart below side that emissions were at 740, say, somewhere like 730 million tons nationally. And it's anticipated that we can achieve a 40% reduction by 2030 through the policy tools that we're talking about. So whether that actually happens is yet to be determined, because it's very difficult and expensive. But you can clearly see this change happening in Alberta with the investments that are going on in carbon capture and storage. Industry is spending billions on capturing carbon so that they can avoid paying the carbon price. So that the carbon price is driving real change in the oil sector in Alberta. It's fascinating to watch because 5 years ago, none of that was there. Now it's big business. So the things that you can pull levers on that will influence demand are the stringency. How tight do you make that requirement to reduce? Is it 20%? Is it 25%? Is it 30%? The tightening rate, is it 1%? Is it 2%? How much more stringent? That will create more demand in the system. What facilities are you going to regulate? The amount of facilities that are emitting, it's clearly something that's going to drive demand. And then, of course, the federal benchmark requirements. So broadly speaking, though, if everything works, then demand should fall, right? Because there's less emissions in the system. If this works well, a regulatory system will have less compliance demand because there's less emissions, which is, ultimately for someone selling carbon credits, not a great deal, but for the system and for this, it's a much better approach. Okay, we'll switch gears here and look at what is the potential if we were to have an OBPS type system in BC. What is the potential for demand? Well, the total reported emissions, as we said, for the facilities that are over 10,000 tons of emissions per year is 15.8 million tons, so 15.8 megatons. You can see by comparison the other provinces, Quebec's a little bit higher, Saskatchewan's actually number 3, Ontario's number 2, and Alberta is more than everyone else combined. But BC's sitting pretty low in the system. So that says that really there's not a lot of potential demand in BC for regulatory credits. There's a cap. And that cap is driven by that regulatory stringency in the OBPS. So let's just do a back of the envelope calculation. If you had 16 million tons of carbon total emissions and you required industry to drop their emissions intensity by 20%, then you would generate, if no one met the standard and there were no other credits available and there wasn't the possibility to pay into a fund. So keep those all. If only buying offset credits was your option, then you'd be looking at about a 3 million ton annual demand per year. It will certainly be smaller than that. So, a wild ass guess, I don't know, 2 million tons, 1 million tons. It's not going to be like Alberta, which is sitting in that 25 to 30 million tons of demand annually. It's clear that there's a limited market here. So your supply of offset credits will exceed demand in a regulatory system, no matter what. So keep that in mind, because the next slide then talks about, well, that's a problem, right? If you have too much supply and not enough demand, then, we all know enough about markets that if, there's too much toilet paper out there, the price goes down on toilet paper, right? There's only a certain amount of demand for toilet paper. So it's no different in credits. When market exceeds supply, then prices fall. But remember back to the federal benchmark, you have to maintain that price signal. That's a key element in the federal system. You have to make sure that the price doesn't fall. So how do you do that? That's super difficult. So provinces have actually been told, you need to match your supply with your demand. We can model what that demand is going to be, and we can model what the supply is going to be, but you have to now come up with that way of managing that supply and demand. Well, you can imagine that would be exceedingly difficult for a province to do so. When I think about all of the projects that we saw yesterday from Krista and the demand that's out there, I mean, really, the projects that are proposed or even foreseen could be enough to satisfy all the regulatory demand in BC. just those 5. You know, it's not a huge number. Problem is, there's a lot of other First Nations out there that have the same desires and the same desire to enter into those markets, right? So how do you pick the winners and losers? That's just a government can't do that. They're very bad at that. And if everyone thinks they can chase the regulatory market, which is a small pie, then everyone's going to get no pie or just tiny little slices of pie. So, you know, and you can't develop a project on a little tiny slice of pie. They're expensive, right? So you need to have a market for your credits. Okay, so that's the bad news, right? Sorry for the downer here. But now we're going to talk about what's a solution, right? So I think a solution is just to have a floor price on offsets that are used in a regulatory system. And the reason I suggest that is because that maintains that key element in the regulatory system, that you must have the price signal driven through the system. So here's how it kind of could work. If you said industry X, now let's take Lehigh Cement. I think that was the name of the company. Lehigh Cement, you've got to use offsets. We go to the BC registry and you purchase offsets. Well, if you purchase offsets off the BC registry, you're not paying the carbon price right now. You're paying much less. But if you required them to say, produce a receipt that says you paid the carbon price, then that establishes the floor price. And a province could say, you know, the floor price cannot be any lower than 90%, which is right about where it is in Alberta right now. Carbon credits are 50, or carbon price is $50, credits sell for about 45, 46 bucks, somewhere in there. But that's a number. It could be 95%, it could be 85%, whatever the number is. But that would maintain that price signal in the system. But it would also mean that now you're creating a competitive environment for all the projects that are out there. And for those credits that aren't going to go to the regulatory system, now you can sell them in the voluntary market. So a nation could sell to all of those baskets that Alistair described in his bucket. You can sell them through the federal system. You can sell them into the provincial regulatory system. You can sell them into voluntary markets, potentially sell them across transnational borders into Europe and so forth. It opens up more doors. So I think what I want to leave people with is that, you know, the idea that the regulatory market will not solve the pricing piece. It just can't. There's just not enough demand. So one has to remember that, you know, there's multiple markets out there, and that a project should be aiming for maximizing revenue across all of those markets. With that, I think I just kind of show you a pretty picture of some trees growing after a fire, and move on to questions, which I can see there's some already. So
I got a couple.
Oh, really? Okay.
So what about if the province wants to purchase credits as a way to meet its own targets?
Province currently does that. I think they purchase somewhere. Well, so the province of BC has a policy where they have said they're going to green the government footprint. And to do that, they're going to purchase offsets. And so they have regular purchases of offsets. I don't know the exact numbers. I think it's somewhere in the order of about 750,000 tons a year. About that. A couple of years ago, I did a deep dive into like government accounts, to try and figure out how much they're actually paying. I think it was sort of 14 to 16 bucks, but last night I was sitting with Warren, he said, oh, we published that information. You didn't have to go to the government accounts. I was like, oh God, you know, going through government accounts really sucks. It's awful. But anyway, I was glad I got the number kind of in that ballpark. 14 to 16 bucks Canadian is the voluntary price. Like that's what credits sell for right now, for avoided emission credits, you know. So that's the way it's working right now. And the government wouldn't need to change that. They could still purchase their credits on that system. The question is, what would a regulated industry do? And how do they purchase credits? One thing I didn't really touch on, but I kind of mentioned, is that, and Alistair brought this up, was that credits can be sold into the federal system, right? So if you have, they have a mechanism of being able to sell credits from a province into the federal system. The problem, again, with the federal system, of course, is no demand. If one goes back to, and I'll see if I can find that map. There we go. That one right there. Maybe this one right here. See these teal areas? And there's one here as well. Those are the provinces regulated by the federal government. There's just not a lot of facilities. I mean, there's, I think, 1 or 2 in Yukon, 1 or 2 in Nunavut. There's like 6 in Manitoba. I think there's the McCain's French fry facility in PEI, and that's it. So it suffers from a lack of demand. Same problem as the BC one. What's the solution? Broadly based, you know, you've got this sort of balkanization of carbon markets across Canada. Well, ideally, they'd be fully fungible and you could sell them anywhere. But that's simply just not the case. It kind of reminds me, you know, I'm of an age that now that I remember that if you wanted to buy beer in a province, like you wanted to buy a Molson in a province, Molson had to have a factory in the province, right? So every province had these breweries all over the place. Meanwhile, Coors, you know, was selling to the planet out of one factory in Golden. You know, what's more efficient? Well, you know, having a different program in every province is not an efficient way to do it. But that's how our federation has evolved, and this is sort of the picture. Will it change? I hope so. It would be nice to have one system of offset, one market that you could go to, but I think it's highly unlikely. So there's a long-winded answer to your question. I told you I could talk.
No, well, I gotta follow up.
Sure, yeah.
Anybody wants to ask a question? Let me know. So let's just say that this BC did go down this path.
Yeah.
Now, well, there's 2 parts to this question. Right now, the price of carbon is $50,
Mhm.
and it's going to go to 65,
Mhm.
and then it's going to go to 80,
95,
95,
110.
and in BC right now it applies across the board.
Yeah.
Whereas other places have some modifications.
Yeah.
So either BC has to raise its carbon tax 65, 80, 95.
They have to no matter what. To meet
Yeah.
the federal
Yeah.
benchmark, you have to no matter what. The
Yeah.
question is, how's it applied to industry?
Yeah.
Yeah.
And the consequence, if they don't do something, is that those industries that are paying $50 an hour will be paying 65 on all
Yeah.
of their emissions. And at some point, they're gonna,
Well, I mean, it's going to make cement pretty expensive in the province. I mean, that's clear.
right.
But you know, the question really is, can industry reduce their emissions at a lower cost? And I think the answer from the rest of the country is yes, they can. And so that's what drives the OBPS. Is it's not sort of it's a results-based approach, right? The result that you want to achieve is lower emissions. Do you tell an industry how to do it, or do you let them figure out and let them achieve it and penalize them if they don't? That's an OBPS. Let them figure it out and penalize them if they don't. You know, the BC system is more regulatory, kind of say you've got to just pay, right? And we'll tell you how we can, you know, recycle that money into efficiency programs and things like that. I think most industry would probably say, hey, look, you know, this is getting really expensive, and you know, we may not be able to afford to stay here. And that of course for a government is, you don't want to hear that. You want to make sure that your industry is still there and employing people and they pay taxes and all that. So how do we make that work and still achieve the same goals, which is what we're all here for, is lower emissions, period.
Okay, so my question is actually, let's just say we went to this output-based system. One of the choices or decisions that needs to be made in that system is how much of the compliance obligation can be used for offsets. It could be 50%, 60%, could be 0. Depends. That's a policy choice. And then coming back to the province, BC has targets that it's trying to achieve.
Okay.
And it buys offsets today, I guess, from Great Bear or
Okay.
somewhere else at about $16 a ton or 20, whatever you said. So then, is it a choice or how does it work? If you generate an offset under FCOP, let's just say it came out tomorrow and it worked. I mean, for these nations projects, it could actually make these projects happen. And there's only a, let's just say it was a 50% of your compliance obligation could be used for offsets. So we only have 1.5 million tons. And all of these nations do it plus another 7.
Yeah.
So there's more offsets available and the price has to be 90%. And that which is another choice.
Yeah.
Is it a choice whether or not they can sell their offsets to the BC government?
Absolutely.
But
So-
is it a policy choice?
No, it wouldn't be, in my opinion, anyway. If you were to, let's just hypothetical, use the BC FCOP, those credits get generated, issued into the BC registry. Now you're an industry and the government says you have to meet a compliance obligation, you have to buy offsets is going to be part of it, whatever that percentage is. We could require companies to buy off the BC registry, but at a minimum price. You have to pay this at least. And then they do so. For all the other credits, it's you can sell to whomever, as you do currently. BC government, there's individuals selling. I think one of the things that I think the BC registry misses the mark on, and it's not a critique, it's just when buyers are looking for these things, they're looking for name brands, right? They want to buy a Vera credit. They want to buy an ACR credit. They want to buy something that's recognized globally because their board could be from anywhere, right? The BC registry doesn't have name brand. It could easly sell its credits into the Vera protocol, for example, if they use that Vera protocol instead of the FCOP. Now, that's I can hear Warren's ears burning, of course, but it's the name brand that you need to work on, and that just helps sell the story. But I think what would help the story is that if you had an FCOP that was used for regulatory compliance, and now you're generating the same credits for regulatory compliance, and they're available for the voluntary market, that makes it a more charismatic credit. And what matters in these markets is the story, the additionality. And the FCOP's a solid protocol. It really is. It's got the stamp of government behind it. The voluntary credits don't have that. So presumably they would sell for more. So, you might be getting a premium from selling them into the voluntary market over and above what you would sell if you were using a different protocol like the American Carbon Registry protocol or the Vera protocol. There's pros and cons, of course, of using different protocols because the timelines are different, right? So for example, I don't know the final version, but you're looking at a 125-year commitment minimum for FCOP, whereas for ACR, the American Carbon Registry IFM protocol for Canada, it's 40 years. Vera, it's 30 years. So for a nation, that's a big commitment. But as we heard yesterday, nations are thinking way longer term than that. So, you're not thinking about a 30-year term. You're thinking about your grandchildren's grandchildren. That's what's important. So.
Okay, so as far as the opportunity to sell into voluntary markets if you register a credit using FCOP in the BC registry, it's not a policy question. It's not a
No, it's a marketing question.
Okay,
Yeah.
so then, and opinions will differ on this.
Of course.
And it kind of segues into the next presentation, I think. It's under what circumstances, if any, would you get a higher price in the voluntary market than you would in a compliance market?
Under what circumstances would you get a higher price in the voluntary market than in the compliance market?
Yeah, so it's going to be tagged to.
Yeah.
Let's say it's 65,
Yeah.
we're gonna be 90% of 65, whoever can do the math on
Yeah,
that.
for sure. I think at the high end of the market, if you're at $170, which is what the price will be in 2030, it'll be pretty difficult to ever top that. But at current pricing, You know, if FCOP were to separate out the two streams of credits that come from forestry, remember there are two types, and we didn't talk about this at all. That's kind of what I talk about in how these projects work, but there are actually two types of credits that are generated. There's the sequestration tons that result from the growth of the trees, but there's also what are known as avoided emission tons, which are tied to that premise that you could have harvested your forest, but you're choosing not to. And that differential between what you could be doing and what you actually are doing generates some credits too. Those are known as avoided emission credits. Removal credits are pretty easy to understand. It's just the growth of trees. Go out there and measure it. The market prefers removal credits. That's clear. The market also has a premium paid on indigenous projects. So indigenous removals are the highest priced credits out there. I think if you added the indigenous removals from a government approved protocol, you'd get even more premium. It's really about the marketing, right? So I could conceive of removal credits being worth, approaching the carbon price at current prices. As that price goes up, I don't see that happening. So I think that's another long-winded answer to your question.
Okay. Go ahead.
David, great presentation. Just
Thanks.
sorry, it's Kerry Booth. I'm with Coastal GasLink.
Oh yeah, okay.
Just wanted to ask, could you speak a little bit about the quality of the credit, particularly with the presentations we had yesterday and the opportunity for the nations to benefit on the socioeconomic impact of these credits? So there's the credits of the actual things that were discussed yesterday as
Sure.
opportunities, but like how does the market respond to the socioeconomic impact of the vending of those credits from essentially the nation selling them to the market?
Sure. It's reflected in the story behind the credit. So in the voluntary market, the story about your credit matters. Marketing your credits matters. So if you're a nation that is developing credits off of a forest that would have been logged, and now you can tell the story of how this is benefiting your community. You've made investments into different operations. Like we've done projects with the Passamaquoddy in Maine, and they used to sell their maple syrup. They had big maple syrup. They used to sell it in bulk, right? And get sold in bulk. Well, they took the carbon money and created their own retail market. So now they're selling their maple syrup in these beautiful little bottles, and they're making a lot more money off of it, which is great. I mean, sort of multiplies that. That's part of the story, right? Credits that are being sold from Passamaquoddy have that story attached to it, and this economic benefit that comes to it. So now if you're a buyer of these credits in the voluntary market, in the regulatory market, it doesn't matter, it's credit's a credit, right? But in the voluntary market, you're now telling the story about how your company is purchasing reductions elsewhere and supporting a community. And so by telling that story, your credits are worth more. It's just simple marketing, right? And that's a good thing. So in the hierarchy of offset credits, North American credits sell for more than South American credits and Asian credits and so forth. Nature-based credits sell for more than CCUS or enhanced oil recovery credits. Nature-based offsets that have indigenous involvement in sell for even more, and the removals credits portion of that, which only is available in one of the protocols. So only the ACR protocol actually serializes removals differently than avoided emission. They sell for the absolute premium. Tie that to potentially a regulatory protocol and a great story, and the pricing is pretty high on those. Yes.
I have a question on the Passamaquoddy.
Sure.
So the
People online can't hear if you
Yeah,
don't
sorry.
use the mic. Thanks.
Just in terms of Passamaquoddy, are those credits under California cap and trade that
They are,
were
yes.
developed? So they have a great story attached to them, but if they're sold under California cap and trade, they're in regulated.
They are, yeah, so you
So-
got me on that.
Yeah, just one.
But in the voluntary market, so there are, California's changed its rules, right? So California used to allow for projects, indigenous projects right across the US. Now in California, if you want to have a compliance credit developed in California, you have to show direct environmental benefit to the state of California. So that limits the scope of where you can actually put a project. So if Passamaquoddy wants to expand its carbon program, they're looking at the voluntary markets, right? And so that's where the story matters. Now you can use the story of what happened under the compliance program and move it forward. But you're absolutely right. It's actually not a great example, I guess.
Well, and there are some great stories
Oh, yeah.
under California cap and trade, but it's interesting that at the moment, none of those affect the prices.
They don't
you
affect
know?
the price.
We have Europe doing jurisdictional,
Yeah.
really interesting things. Like there are some interesting stories, but the fact that you can't tell those stories in the regulated market and create anything
Well,
is interesting.
yes and no. I mean, companies, if I were a company that had to buy credits and I had, options to buy credits, and I look at Alberta where there's partnerships now between First Nations and companies. So I have to buy the credit no matter what. Am I going to buy a wind credit or am I going to buy a credit from one of my Indigenous partners? So, the story, it's not totally divorced, the price won't change, but who's going to buy these things matters, right? So yes, as industry, you want to support your Indigenous partners in their development and have that money flow back into Indigenous communities.
Okay, we got a couple of questions.
Sure.
From online. First one from Casmel. What specifically was the lobbying piece that you were suggesting, I think, early on?
Sure, yeah,
And
well,
then let me ask
okay,
both
yeah.
questions and then you can get them both. And from Rachel Holt. Maybe that just you didn't hear it properly, but can you explain why avoided emissions credits are not considered as valuable in the market compared to sequestration?
Yeah.
This doesn't seem to make sense from an actual climate change position.
Yeah.
Okay, go ahead.
I'll start with Robert. Doug. Yeah,
Doug.
okay, I'll start with Doug's question and then move to Rachel's. So, and now I'm forgetting Doug's.
That was the lobbying.
Oh, the lobbying, right. Lobbying, so, A, do you want a regulatory program or not? You want to lobby for that. Okay, now let's say that's a success. There's a regulatory program out there. Now, what are those policy levers that you want to use that maximize the credit demand, if you like, in the system? One of those is what's the split between credit use and fund payments. It could be 100% credits. That would obviously help demand. What are the potential protocols out there? Well, we're only talking about FCOP, but there could be others. If you lobbied only for forestry, that would kind of create demand for forestry, right? So there's a number of touch points that you could lobby for as an organization that would help support forest carbon demand in the system. Some of those decisions might already be made, but that's where the sort of pinch points are. On the avoided emissions versus the sequestration tons, the removal tons, it's pretty simple. So, net zero commitments that are the people buying voluntary credits are companies that have made net zero commitments, right? We heard from some of them yesterday, we're doing this first, and we have plans to buy these things. There are companies actually buying offsets right now to meet those net zero commitments. There are an evolving system of rules known as ESG, environmental, social, and governance rules, about how companies can implement net zero programs. And increasingly, there are what are known as ESG ratings. So Standards and Poor's and these companies are going out there now rating ESG programs. And increasingly in the future, it could be that, if you want to get a loan, it's not just your credit rating that they're looking at, but it's your ESG rating as well. And that's more and more to the point. And ESG, really removals are what you want to do. You want to pull CO2 out of the air, right? Rachel's absolutely right. From a offset point of view, that they're equivalent. Avoided emissions are the same. It's an emission that didn't happen somewhere else, right? Because you did this. But from a market point of view, they want to see removals. So the companies are focusing in on removals. The second piece is that it's verifiable. Like you can go out every day of the year. I mean, foresters have been doing for years, centuries, go out and measure the trees. Like there are plots that measure those. You can go after next year, put a diameter tape, you can calculate how much carbon is actually being grown on that tree. And you can do that day in, day out. No one can argue. It's absolutely rock solid. So that gets to that additionality piece. It's absolutely verifiable, no argument. On the avoided emissions side, remember, this is now a hypothetical situation. You could have done this, but you're actually doing this. On the argument's always, well, would you actually have done that? Right? You know, and so you see some of these, John Oliver had a piece on offsets about a month ago. And he used an example of a project in the States where there's this hunting lodge that had gotten carbon credits. Now the rules back when that project was in place allowed for that. But the reality was that, you know, the hunting lodge probably wasn't going to clear cut their land, but that was what generated the credits, right? So there's this question of credibility and additionality that plays into the avoided emission credits that doesn't play into the removals, and hence the price differential. I think it really comes down to credibility. So when you're developing a project, you really have to be very careful about what you attest could be done on the landscape, because that eventually will end up being scrutinized. People look at this stuff now in a way they didn't a number of years ago. And that scrutiny is a good thing because it drives standards higher for offset credits, makes them more credible, makes those attestations of benefit more credible.
Okay, last thing from Rachel, just about, you haven't mentioned time in that
Time.
sequestration takes time.
Yeah,
Trees
yeah.
take time to grow.
Yeah, trees. Well, I mean, we're not talking about, like the project we're talking about, are improved forest management type projects. Those trees are already mature. You have to make the argument that you could have cut them.
No, I'm talking about, she's talking about the removal credits.
Yeah, but
It
that's
takes time.
predictable, and it actually adds up, right? There's a lot of trees out there. There's a lot of land, and those removals, while they're, you know, it's a small amount for every tree. You got billions of trees, right? So that number adds up. The question is, what's additional, right? Would it have happened anyway?
Yeah.
Right? You know, so you can't get credit for something that would have happened anyway. But if you were going to log it, then that additionality argument does apply.
Okay, I'm just gonna shift to the next speaker, and that doesn't let you off the hook, or Alistair, for the final discussion. But Chris, who has also volunteered to provide some insights and works with Alistair in the same company, is online and about to present his perspective on, I think, voluntary versus compliance and the other things. Off you go, Chris. Thank you.
Thank you. God, I have been dying to jump in that conversation, and good to meet you all. I'm sorry I was online. I'm in San Diego this week, coincidentally at a corporate sustainability conference. So I've got a couple of hot takes on what corporates are saying about this very thing. So given Alistair,
Chris?
Yes.
Sorry to interrupt. You're actually not that loud. I don't know if you can turn your mic up.
I can't. I'll just move the screen a little closer. Is that better?
Yes, that's better.
Okay, I will try to project. Sorry about that. So given that Alistair has provided what I'm sure was a great introduction to Radical, should I just leap into kind of what I'm going to cover and then my slides? And I think that Chandra was going to do slides for me. Is that right?
Or if you would prefer to.
She can, or if you would prefer to. And
No, I'd prefer if you could. Thank you very much. So just maybe while the slides come up, I'll just say kind of very briefly what I'm going to cover. As I mentioned, I was dying to jump into what what David was saying, and we may have some slightly different takes on it. So this should be a good conversation. So, why are corporates engaged in the voluntary markets? And this ties into kind of removals versus avoidance conversation we were just having. So as we all know, fast and deep cuts are required to meet targets. And specifically the removals versus avoidance ties into the Paris Agreement targets of net zero by 2050. So to achieve these, as stated under the agreement, we need to have 50% cuts by 2030 and net zero by 2050. So at the end of last year, corporates representing over 68% of global gross domestic product was tied to net zero targets. So this is why this is really a hot issue right now for corporates and how they're going to meet these emissions reductions targets. So offsets play a critical role in this, as we all have said and talked about in these last couple of days, I'm sure. So what I'm going to really focus on today, my topics will be a brief history of the voluntary carbon markets, just a hot take on that. What is the size and the scope of the market? What are buyers wanting to buy? What are the registries, and David touched upon this, what are the registries they're looking to for trustworthy credits, and who are the buyers? So perhaps you can go to my fourth slide, which is just the overview of the voluntary carbon market history. That's the one. So first of all, I apologize, this breaks every rule about PowerPoint presentations, which is not a great place to start. There's far too much information on this. And I can assure you are not obliged to read any of it. I merely want to illustrate that this is not a new market. I think that is often the consideration of people. They think it is a new market. It is not. The origins of the market go back over 20 years, with the first investments in forestry projects in the late 1990s. It has since evolved and formalized quite quickly. The first red mark you can see there is when Kyoto was signed and ratified in 2005. And this is with a period where the process became a bit more formalized. Fast forward 5 years, the second arrow you see is in 2010 when Microsoft launched its internal carbon pricing system. Now this was really important from a corporate perspective, but put a real stake in the ground for corporate action. Coincidentally, the same year California's cap and trade system was activated. Now we fast forward to today, as I mentioned, 68% of GDP covered. We see over 3,000 large companies and financial institutions with net zero commitments. I tell you, again, as I mentioned, I'll give you a couple of hot takes. I'm at Sustainable Brands in San Francisco, and I can tell you that while we know that financial markets around the world are having a very difficult time, the anecdotal information from corporates is they are not slowing down. For example, Salesforce has just launched a new carbon marketplace, should be out Q1 2023. Amazon has a new climate-friendly product certification program, which they expect to do big uptake very shortly. These are just coming out in the next couple of weeks. So given all this, all the action that's going on, I'm going to spend a few minutes just breaking down what are the key elements of the voluntary markets, so then we can hopefully launch into further discussion as you already engaged in just before I joined. Next slide, please. So size is important when it comes to markets. And I will say off the top that the data is slightly dated. Information, as you probably know, probably why we're having this conversation, information in the voluntary carbon markets tends to be a little bit opaque. It's slow to emerge, and there are many sources, but it's not always easy to find just one to look for your final decisions. But I will update as we go through this with anecdotal information. So this graph gives you a sense of the volume of total credits traded, and it's a bit of a volatile history. Now, it's hard to determine looking at that graph a predictable trend until you get to about 2017. When we begin to see clear pathways and increases in steady increasing corporate commitments. This really ties into what happened in Paris in 2015. Once we were clear and the Paris Agreement was signed, corporates all of a sudden had a much clearer pathway to net zero. And so this is, my belief, is what began to take place. Now, for a long time in the voluntary carbon markets, between about 2010, 2011 through 2017, we saw about a $200 million per year USD credit market. It was relatively small. As of August 21, we saw transactions really bump up, over 800 million as of last August, so about a year ago, but ended up eclipsing over 2 billion USD in 2021. This year is anticipated to exceed that number again. Now, relative to global compliance markets at several hundred billion, it's still relatively small, but best information we have and comes from organizations like McKinsey, et cetera. So to meet corporate net zero commitments, plus other commitments we're seeing coming out, the voluntary carbon market will need to grow between some 10 and 50x by 2030. 7 years. I'll give that a moment to sink in. It's going to be enormous. Okay, next slide, please. I thought I'd include this next one. This is around, you know, what are people buying? This is an important part of the puzzle as well. I think next slide, please. So lots of project types, as you've talked about, as David has brought up, particularly around forestry. But when we talk about voluntary carbon markets, my slide hasn't changed. I'm not sure. Are you on the, what are people buying?
It froze. This is the part where we all get patient.
I'll keep talking while we find that next slide. It's simply, again, an illustration of the project type. So, you know, in the voluntary carbon markets, as David also mentioned, charisma is important, but it's not everything. So we typically break things down into 4 dominant categories. Companies are typically looking for agriculture, forestry, and land use, which is kind of bucketed as OFULU. We love our acronyms, AFOLU, or better known as nature-based solutions. We also have renewable energy, energy efficiency products, and industrial projects. Now, of course, the common equivalent of all projects is 1 ton of emission reductions have at their core, and that represents 1 credit. But pricing comes down to many factors. It comes down to the project type. It comes down to where is that project located? Is there additional co-benefits? Does it meet sustainable development goals, et cetera, et cetera? So there's a bit of a mix. When you come up with a menu, what pricing entails, there's a few things in there. If it was driven by price alone, industrial projects would likely get selected more often than not. However, you can see the arrow there indicates the dominance of forestry and land use. This project type sales grew by almost 140%, as you can see over the previous year, and it's still being favored. You know, again, as we said earlier, if this is a more client-facing company, they really find that important. Something that aligns with their environmental sustainability goals. Why do they buy offsets? So the kind of unpacking why companies buy offsets is actually, I think, an important discussion as well. Now, fundamentally, the drivers are accelerating reductions that are hard to abate. They want to manage risk. They want to create goodwill. They want to meet client demands, strengthen social license, and hedging against increasing carbon prices. So these are all, so when it comes to deciding kind of what kind of credits are important for a particular buyer, I have to come up with all of these ideas. What exactly is the underlying driver? What's going to suit them best? On to the next slide, please. Thank you. So location-wise, again, jurisdiction is down to the buyer in terms of what they prefer. David mentioned North America being preferential. That is true for North American clients. It is not borne out in the data when it comes to international buyers. Canadians, oddly, seem to be, we love projects in our backyards more than anyone else. Americans will buy anything from North America and then blending into Latin America. European buyers, who are the largest buyers in the markets, look at international much more frequently. So it all depends, again, who your buyer is and where they seek these projects out. But you can see that how North America, when it comes to project development, plays a relatively small role. We host fewer than 10% of total credits transacted last year. Projects, you know, if we want to unpack that a little bit, part of the reason is why the voluntary market has grown that way is that projects tend to happen in those jurisdictions where price per ton of carbon abated is lowest and the opportunities for upside are greatest. So that happens to be in at least less developed countries. But given the market demand and desire for Canadian projects, there is a great deal of opportunity in this country. And I'm excited about that. Next slide, please. I'll just touch on where these are housed. So standards are the place who create the rules by which methodologies and protocols tell us how are these credits created. It's also where the issued credits are stored. So once a credit is issued and verified, it's uploaded to the appropriate registry. And listed here, you've seen the dominant public registries in the voluntary carbon markets, with VCS as Vera, the largest player by far internationally. Registries house all the relevant documentation for given projects, the overviews, the notes, the validation, verification, etc. where there's been, there's been criticism, lots of criticism, I should say, of the opacity of the voluntary carbon markets. This gets better, and there's other issues going on around guidance this year coming out. Groups called the Voluntary Carbon Markets Initiative and the Integrity Council, et cetera. We're having a lot of scrutiny, which I think is great. We're going to see where it all lands, but this will all help to inform what project types, what standards are also going to be carrying on forward as dominant in our markets. The last slide I'll just touch upon before we get into discussion is around who's buying these credits. Purchasers, in my experience, and I think is borne out by the research and the data, are across every sector. We see commitments from across banking through all sectors. And the role of offsets is evolving with regard to how much of any firm's emissions are appropriately mitigated through offsets. We've touched upon, and this becomes a bit of a firestorm, removals versus avoided credits, and we can talk more about it because it is very exciting and it's not clear. But removals are definitely in the ascendancy. Last year's credits, if you broke it down, removals only represented kind of less than 1% of total voluntary carbon markets. So while we talk about them a lot, there's actually not a lot of action happening. Lots of projects are being developed. As David mentioned, under ACR, you can have a bifurcation within a project where you have avoided and removal credits in the same project type, or same project, pardon me. So that's emerging, and that's exciting to watch. So there's lots of opportunities in the removals, but very little to go by. Anecdotally, again, we have groups like the Frontier organization, which is headed up by Microsoft and Stripe and some other luminaries in the tech sector, who will pay up to $1,000 a ton for direct air capture and some unverified credit types. They're really on the bleeding edge. So that's kind of data that's kind of on the very edge. Other removal types can be concrete sequestration and other products, which are going in the hundreds of dollars per ton. Again, those are not verified. Those are not on standards that we recognize so far, but they will be in time. So that really sums up what I wanted to share, and then happy to stay around and indulge in that colorful conversation about removals, avoided credits, all the other stuff.
Thank you both. And so why don't we just start with you reflecting on removals versus avoided and what's going on.
Yeah, well, like I say, I'm paying very close, as everyone, attention to this. It has really begun to emerge since the Paris Agreement. And it is because simply that we recognize, if you adhere to something called the Science-Based Targets Initiative, which many corporates are now doing, which gives you a very clear pathway of getting to net zero by 2050 at the latest. Sorry, did someone say? So on that pathway, there are short-term, medium-term, and longer-term goals. But what it says now, and again, this guidance is only being developed, so it's not final, but what they do say is that removal credits will be preferentially selected over other types of credits. And that is simply because on that pathway to net zero, it is agreed that we need to have vast removals. Removals will be the most important credit type. That is not to say that other credit types will not be continued to be purchased, but that is going to be the dominant type according to many figures.
Right. And if we reflect back on the discussion yesterday afternoon, where Rob was pointing out how in the IPCC reports they're showing how we actually need to get into negative emissions in order to achieve net zero even. And ultimately, if we're going to recover any climate stability, we're going to need to remove GHGs from the atmosphere, and avoided emissions don't do that.
That's right. That's exactly right.
Alex Nestor has the as well.
Yeah, okay, we have, and then I didn't see if the chat was a question or just a comment. Yeah, so I think Darcy beat you, and then you're next, okay? So Darcy, so Chris in the chat says, knowing what you know about buyers, what ones do you think could best meet First Nations interest in highest price, respect for cultural and social benefits as well, and long-term thinking / alignment?
Great question, Darcy. Hi. So my experience tells me that it is these large tech businesses that really have the biggest interest right now and the wherewithal to spend money on offsets. Great Bear has always been very interesting to these types of organizations. And maybe this is time to touch upon, David mentioned also the BC Carbon Registry versus other registries. And so I think that has been a bit of a limiting factor for these companies. They typically do want to purchase offsets that are registered on Vera or Gold Standard. And so the choice to register on the BC Offset Reg has proven limiting, I would say, for that project. But Great Bear, of course, has been able to sell to the BC government, so it hasn't slowed them down, I don't think. But going forward, I think that most big North American companies that are very consumer facing would prefer, again, as I said, the stackable or kind of nature-based solutions. If it's indigenous led, that's better. If there's biodiversity, there's other, like, this gets all kinds of complicated, but there's stackable benefits on top of the credit itself. So there's something called the climate and community biodiversity, which means you can prove, and there's a verification process, that you are protecting biodiversity in that region or improving it, et cetera, et cetera. Each of these comes with additional value. And these big corporate clients, as I said, who are very customer facing, preferentially choose that type of credit.
Great, thank you. Go ahead.
Thanks a bunch. Just wanted to fill in a bit on the comment on avoidance and removals. As you know, as an investor, we're pretty agnostic to both, so I like to think we don't have any conflicts of interest. Which is to say that we've sort of observed this discussion going on, as many others have. We tend to see it as the concerns about avoidance being a bit unfounded. If you've got a strong project, if you've got, let's just say you stop doing avoidance and start going to removals. Well, if you didn't avoid those emissions, they're still going up. So the more emissions that go out, the more removals you need. And you can't have indefinite removals either. So, I mean, we tend to think that both of these have a role to play in where we're going to get. Longer term, we're going to need removals. Obviously, there's too much carbon in the atmosphere, but you can't just keep removing stuff if you don't avoid. Which is another piece of the reduction puzzle anyway. So just to make this a little more concrete, if you cut down a forest, all that carbon's gone up. And then if you plant a bunch of trees, you might remove it over like the next 30 years, but that carbon's still gone up. So at best, you've ended up at even, and at worst, you've ended up releasing a bunch of carbon today and then, reabsorbing it over the next 30 years, which is not very helpful. So, I mean, from a climate perspective, it's probably better to start with avoidance today, but obviously long-term removals are going to be a huge piece of the puzzle. On SBTI, we similarly think it's a little bit
SBTI.
Sorry, science-based targets that you mentioned. Was that we tend to think that it's a little bit of a reach where they've gone with removals, but at the same time, and I'm not entirely clear on the details, but they do allow for certain offsets to be purchased, which could include avoidance as part of companies making sort of commitments that go beyond the minimum. So there is room for it there. Anyway, that's just a little bit of perspective from our end to hopefully give some context to that discussion.
I disagree with nothing that you've said. I think you're absolutely bang on. I simply bring it up because we're seeing what's happening in the markets, and that is a bit of a bifurcation between project types that is really showing up in pricing. And as I said, and I think that's just a result of supply and demand. You mentioned the Science-Based Targets Initiative. I think that is driving it fundamentally. And I suspect that things will cool down a little bit. There won't be such a difference between the two, but I do see a premium still being put on removals for the next, I don't know how long period of years. Simply nothing available. It takes years to set these projects up. So I think you're right. We need all of the above. I was simply getting at the data on pricing.
Great. I'm just going to make an assertion, and if it's wrong, you can correct it, and we'll get the truth. The First Nations nature-based solutions that were presented yesterday morning essentially included 3 different types of activity: protection, improved forest management, and restoration. And recognizing there's nuances in all that. The protection is essentially avoidance, or sorry, not avoidance. It's avoided, and it's immediate credit is created versus improved forest management or restoration takes time before it actually produces credits.
No, I disagree with that. I mean,
Okay.
IFM produces credits right away. It's really tied to that avoided emissions. The removals take time, right? You get annual growth, and that curve of what that will look like depends on the forest you have. If it's old, it's going to grow slowly. If it's young, it's going to grow faster, and the species you have exactly. So I mean, that
Okay,
does take
good.
time. You're right. But the avoided emissions credits are actually front loaded on an IFM type project. So the way the protocols work is they make the assumption that you're going to maximize your net present value of your property, right? So you're thinking just of land as a value, right? And so what you try to do in your modeling is try to drive down the actual harvest. So you're harvesting it to some level of aggressiveness, right? So the first year tends to be a big dip in carbon stocks, the next year a little bit less. So you actually get a pulse of credits right at the front end of an IFM project that basically pays for the project. That tapers off over 5 to 8 years, depending on a whole pile of factors. But it's not true that you have to wait for your credits. Afforestation, though, that's a different beast, because obviously you're starting with small trees and they take time to grow. Those are more difficult to get off the ground simply because the money's not there right at the front.
Great, thanks. Go ahead.
Yeah,
Oh,
there was a question about jurisdiction earlier this morning about
let me just get you a mic.
okay. Good morning, everybody. My name is Steve Anita. Came to you guys from Yellowknife, Northwest Territories. I've been working in support of Indigenous leadership and conservation for over a decade now. I've led my community in negotiated agreements with Canada and the government of Northwest Territories to create one of the largest protected area in the world. Over 26,000 square kilometers as an Indigenous protected conserved area in partnership with Crown governments using their laws in the form of the National Parks Act and the Territorial Protected Areas Act and the Territorial Wildlife Act. The issue here is this is a huge territory with very limited resources to manage. And now when we're talking about jurisdiction, when Canada is committed to 30%, we're talking about a quantum of land the size of Manitoba or a little bit bigger. Between now and 2030, that's the remaining 16.5%. We're at 13.5% now. So what I think we could, with support from industry and the Canadian public, we could force the provinces and the federal government to support Indigenous leadership to create Indigenous protected and conserved areas using the carbon market to pay for the governance management and operations of these places. It's needed as an opportunity for reconciliation. Canada right now with its national park system is operating at 75% capacity. They don't have the financial resources to pay for what's needed today. So if Canada is going to protect 30%, which if you compare to other countries, our 30% can encompass several countries that are making the same kind of commitment. So it's important that we create carbon markets that is global in nature so that we don't have to burden the tax base of the country to reach 30% and to maintain 30%. Having said that, getting back to the north, places like Saitininyana, which is the name of the protected area we created, don't qualify for the marketplace because of additionality. Yet, an additionality is not a threat from actions of man. Yet climate change is caused by man. I think that we all agree on that. And the greatest threat to these spaces, especially in northern boreal regions of Canada, is climate change itself. And the forest fires that are happening now is becoming so intense. I mean, you know that about that in BC. The forest fires have become so intense, they're burning way more and they're burning a lot hotter. And they're sending out a lot of methane, carbon, that is very dangerous. So everything we're talking about here, if we don't avoid other emissions through the marketplace, then everything we're talking about here is for naught. You know, with the permafrost melts and releases all that methane, we're talking dramatic impact to a scale that would make what the weather looking like outside very, very pleasant. So avoided emissions, it's got to be high up on the priority list. The disconnectedness in which Canada's approaching this whole thing is very, very concerning. There's no coordinated way. It's let's do this there, let's do this now. Canada has the international commitments. They're making 30% commitments. They're talking about 40% reduction, but the responsibility lies in the jurisdictions and provinces and territories. Not all provinces and territories are supporting that 30%, so they're playing hardball. So the opportunity for people in this room and in rooms like this across the country is how do we work together to inform where the public governments should be going, and that's where democracy should be working anyway. So how do we, as a collective, I'm not just talking about people in this room or online, as a collective who are wanting to get into this marketplace and influence the marketplace, how can we work together to ensure that Canada is a good place to invest for carbon credits, where carbon integrity there's no question about it, because the greatest threat to the carbon market is the integrity itself. So how do you avoid carbon cowboys to kibosh this emerging market? How do we take the value of carbon and the value of land, which now for the first time, there's a value on land in its existing form, in comparison to Canada's history, where land has no value until you destroy it and you create a product out of it. So there's a disconnect even in this room where carbon is just a product. It's just another financial value. What the Paris Accord and what everything else is asking us to do is to transform the way we value things. And there's an opportunity to create a new value system within the economic system. Right now, if you're getting the project off the ground, what's the cheapest and quickest way to get there? And that's the value system. That increases the shares of the whoever owns the business that are creating the product. That's destroying the world. That's got us to climate change. That's colonialism in action. How do you reverse from that? Well, we're in that agenda right now in Canada. We are in a reconciliation agenda. How can we take that reconciliation agenda? How can we take the 30% commitment? How can we take that and also create a marketplace where we recognize the value of Canada? We have globally significant environments. If we don't manage it well, it's going to have a global impact, a very negative global impact. But we're only 38 million people in a country that's huge. We don't have the tax base to pay for all of that. So how do we create a marketplace that's going to help with that? When England commits to 30%, our 30% can encompass the whole of England. Therefore, why not make sure that the marketplace we create has space for England and England's peoples and corporations to pay for some of the work that's required here in Canada? So the question I have is, how quickly does the market react to the needs of the environment? If we agree that the northern part of the country that doesn't qualify for carbon projects because of additionality and jurisdiction, but it's needed there's a need to manage those areas. How quickly can the market react to that? For example, I read an op-ed, this is an Alaska base, for example, avoid wildfire emissions. Currently, the American government supports Alaska with $134 million for forest fires. But that $134 million doesn't give the Alaskan government or the communities and whoever's responsible for the ability to fight all the fires. they have a let it burn policy because there's not enough financial resources to fight the fires, and that's right across the board. With an increase of a budget of $700 million and a policy to fight all fires that start, the avoided emissions is up 930 gigatons annually. And to break that down to per ton cost is $13 per ton. So, that's the challenge and the opportunities as well. So, the opportunity is not just to create a market of carbon and a financial value for the carbon, and how can we trade and buy and whatnot. I think that we've got to be able to use this as an opportunity for transformational change. How we could create value systems in how we operate on the ground. Pipeline companies, for example. Now that we know that there's a value in land, even though it is not part of any kind of system that's credit, can we avoid that breathing lands that sucks in carbon? That type of system change is needed, and how can that be reflected in the share value of that company? So back to the question, how fast can the market react to the needs of the environment, of the land? Because these things are created because of changing climates that's having a negative impact, and it's having a horrendous impact on the economies of the world. Thank you.
Yeah, I can kind of take a stab at that. You're absolutely right that the mechanisms of an IFM type protocol just simply not appropriate for the land base that you work in. But there are new protocols coming. One that I point to, and I think you kind of alluded to, Climate Action Reserve is developing a protocol for avoiding fire and carbon that can be sequestered or kept from burning. So if you spend money on fire protection, you can earn credits. That protocol is not ready, but it is in development. That might be a suitable protocol for that area. But I'd also point to the concept of biodiversity credits, which are not carbon credits, right? So maybe that's looking at carbon credits for that solution is not the right place to look. Biodiversity credits are things that are a new market that's evolving too. I don't really know too much about it. There are probably people in the room that know a lot more, so I'll defer to them. But that might be another avenue to look at for some sort of financial way of. I see Alistair's got his hand up, so.
Okay, just on. Okay.
I'll bring it over.
Oh, thank you.
Stretch my sword knee. You gonna turn it on?
There we go. So just as a point of interest, in Queensland, Australia, they've developed 2 state markets specifically to address similar, maybe not the same concerns, but concerns along these lines of what do they need from an environmental perspective. So they recently came out with a reef credit program, which is specifically designed to mitigate runoff of things, sediments and nitrogen actually that's going to harm reefs. They also have a land restoration fund, and that land restoration fund is a program developed specifically around restoring the lands that have been degraded. Now, it's not necessarily congruent with what you're saying, but the point is that the government cared enough to create a structure that was going to benefit the environment. And they did it, to David's point, outside of carbon markets. So I think there are mechanisms that are being developed in many places around things like biodiversity credits, like water credits, like habitat conservation credits. It's a question of what's the appropriate way to do it. How do we get the government on side making the decision to do that?
Great, thank you. We've got about 14 minutes, and we have a couple of questions online from some of the First Nations NBS project folks. And we also have David Oxley here from the Great Bear Initiative. And I thought people might be interested to hear kind of what's going on with the sale of carbon credits from the Great Bear Initiative. So before we do that, though, David, just to sort of cue you up, Doug Casanel asked a question and Darcy had a follow-up. So I'm gonna ask them both. So Doug's question was, do you think we can create a charismatic brand for future carbon offsets? What would be the best way to begin framing this approach? And he's talking about a charismatic brand for the NBS projects that First Nations are thinking about developing. And then Darcy Riddell's follow-up. Could you imagine a group of First Nations governments creating a Verra certified offset to bring to market? So Chris, you could answer that, David.
Yeah, to answer the second half, I mean, absolutely, I can see a, Verra offset being something that a group of First Nations do in conjunction. Most of these protocols do allow you to aggregate. So there's nothing preventing multiple First Nations from combining their, land bases into one project. On the creation of branding, that's a marketing exercise, and how you do it. I mean, this is an organization. It's sort of set up for something similar. So, that could be done through FNCI as part of their service to their member nations.
House building.
So that's one way you can do it. I mean, there are developing companies and companies like Radical and others in the room that do that marketing as well. That's another option as well.
Yeah.
I think a bigger question is how do you make the BC brand more sellable? How do you expand that? Because you have an existing system, you have an existing registry. So could you use that existing registry and expand the branding on that? And that's something maybe you lean on government for. It'd be in their interest as well as nations. I don't know, Chris, you got any thoughts?
Totally agree. I mean, if David Oxley's on the line too, he can speak to it far better than I. I mean, Great Bear is a brand that people know. Great Bear has done a tremendous job. I mean, even the naming convention for that project and the location resounds and resonates with people globally. Particularly Europeans love our coast. They love British Columbia, love to visit, they love to enjoy everything that we have. So I think that's bang on. I think, and I love the idea of creating kind of an overarching brand, whether it's the climate initiative or whether it's British Columbia, writ large, whatever that looks like. If there's a particular project type that this group wants to put together, there's a lot of power in doing it together from a resource perspective as well as from a branding perspective. But I would leap to the branding pros, but I know how powerful that can be, and I think Great Bear is a terrific example of that.
Great. I think you've actually answered both questions. Awesome. Thank you. And David is just, or his partner or other person, Danny, are you ready?
Oh, yes.
Wherever you went. Oh, there you are. So he's got a brief presentation for us, and if you could make, so is it Danny?
Yes.
Online?
Yes.
Yeah, so you can make Danny co-host and she can just show her.
I'm actually just gonna email it.
Oh, you're gonna email it? Okay. Okay, so in the meantime, David, why don't you start to introduce yourself and how things are going with the Great Bear?
This was a Danny and I. Danny, are we doing this together?
Yeah, I think so.
Sorry, I didn't know that.
All good, I just.
Sorry, pardon me.
I just sent it now.
Okay, so Shanda, you should have that. Can you have a mic?
Yes.
Awesome. The green light's on, it's on.
Well, I guess we could introduce ourselves first. David Oxley. I've worked with Great Bear Initiative Society, which is the organization of the Coastal First Nations since 2015. I was not originally hired to work carbon. I kind of crept onto the edge of my desk and it kept going. And by 2018, I was fully involved carbon. And I was working with Paul Correa. At that time, he's the senior policy advisor for GBI. And this January, we hired Danny. So we now have 2 full-time equivalent carbon people. And it was a revelation because the 2 of us were still overwhelmed. Carbon's great, it's complicated, it's complex, it's fascinating. But yeah, it's a lot of work. So I'll let Danny introduce herself and then we'll get going on the.
Perfect. Okay, hello, everybody. My name is Danny Warren. I am Woodland Cree from Montreal Lake Cree Nation, grew up in Manitoba and have lived on the coast now for about 12 years. I don't intend to go back to the prairies, I'm sorry. Thank you for Alex for inviting us to share our work today. I know it wasn't planned, but we do really appreciate being included and sharing our project with you as a tool to fight climate change. Do we have the PowerPoint up by chance here? Oh, great. If you go to slide 2, that would be great. Okay. Just the slide 2. Thank you. So as David mentioned, we work for the Great Bear Carbon Credit Limited Partnership, which was founded by Coastal First Nations, which is a unique alliance of 9 British Columbia First Nations in the Great Bear Rainforest and Haida Gwaii. I wanted to show just a couple quick photos. The top photo in this picture is from a potlatch and a pole raising we had in our community in Haida Gwaii this summer. This is very big for our community. The bottom photo is of our Coastal Guardian Watchman doing some creek walks to assess salmon and aid long-term restoration efforts. That was also this summer. And next slide, please.
Okay, sorry, we did this 2 weeks ago. We weren't ready to do this again. Great Bear Rainforest achievements. 2 million plus hectares of new protected areas. This says government to government. I learned yesterday a change to that. This is government to with government managed. Was it your point? Of terrestrial protected areas. These aren't just 2 governments talking at each other. These are 2 governments, or actually in our case, a number of governments talking with the provincial government and managing the area together. We think this is unique in Canada. Total area of our 3 projects, and I say 3 projects, we actually managed 2, or does that come out?
Yeah, we'll get to it.
We'll get to that. There's 6.4 million hectares in our project area. And this came about through many years of land use agreement work, moving towards a reconciliation protocol agreement with all our nations and the provincial government. And then those ABSAs and now IABAs, which are the benefit sharing agreements. And Danny will cover that as well.
Could you do the next slide, please? So just a quick highlight from this one.
Oh, this is the index. This shows the change in protection of the Great Bear Rainforest. And we got to give credit, it's just a slight aside from this. Environmental groups were interested in protecting the Great Bear Rainforest. One of our GBI directors, Ben, whose last name I cannot remember, I actually never met the gentleman. He came to a GBI board of directors meeting and posed the question, what about carbon offsets as a revenue source back in 2005? And that's where it started for us. There were environmental organizations very definitely involved trying to protect the Great Bear Rainforest. But this shows the protection between 2005, 2009, 2016. and to our north central, you're gonna do this. I'll pass to Danny.
Thank you. We'll go to the next slide, please. So the Great Bear Forest Carbon Project consists of 3 different projects. This might not be well known. They are on the BC Carbon Registry for public viewing. The projects are divided and titled by their geographical areas. The Haida Gwaii and North and Central Mid-Coast projects are managed by us, the Great Bear Carbon Credit Limited Partnership. However, the South Central Coast project is managed by the Non-Mokolas Offset Limited Partnership, which was founded by the Non-Mokolas Council Society. The Non-Mokolas Council Society provides their member nations with information services, technical support, coordination and advice to assist them in their decision-making and work. This work includes reviewing applications for provincial tenures and permits referred to the member First Nations for the decision and watching over the Uwikinola and the Hamaya Stewardship Network. We go to the next slide, please. So this is just a photo of the project area for Haida Gwaii. So you can see the whole piece of land on Haida Gwaii. Next slide. And this is the North and Central Mid-Coast project. You'll find with this one for a visual image, because the map is actually taken from the project report, which is older. And so below the North Central Coast is the South Central Coast, and basically below that, from a zoom out on Google, is Vancouver. So to give you an idea of where our projects sit up along the coast in the Great Bear Rainforest. We'll go to the next slide, please. And this is the South Central Coast project area. Again, this is the project managed by the Non-Mokolas Council. We work in partnership with them through joint sales, and we've recently started supporting students to a UBC carbon certificate program from both member nations. So just supporting students and working to build that capacity together. We'll go to the next slide.
Just to point about CFN, it's an aggregate of 8 nations, and the Namakolas is an aggregate of 5 nations currently. That's extra point. Okay, benefits of carbon revenues. Our limited partners mandate is to return as much funding as we can to our member nations. This creates not actually journalism jobs in forestry, it's new jobs. And we didn't actually build, but the funding established stewardship offices in each of our communities. The first distribution of revenue from our carbon projects established the stewardship offices. Those offices manage the conservation and biodiversity areas. It also funds clean energy opportunity. We're looking into fuel switching projects, etc. 140 jobs are supported in our areas. Ecotourism is supported. MAP, a major project, Marine Plan Partnership, is trying to establish on the oceans what we currently have on the land. Again, that's a government with government plan and work. We are working on a blue carbon quantification methodology project. We hope to establish blue carbon projects in our region. Kelp is looking like the best option for our region. We're just coming into year 3, which is when the project gets written up, and then we take it to protocol people. The province would be one example. Our funding is 65% is earmarked for stewardship activities, covers the administration costs. There's varying sizes of administrative or stewardship offices in our communities. Community watchmen are funded by that, guardians and community care programs, bear safety. Helsick up in Bella Bella, they recently opened their big house. Some of the carbon revenue supported that structure. And next slide, please. I kind of did this. The core agreements, which establishes ownership of the offsets, and this is an interim measure because this is a sharing agreement between our nations and the provincial government. Our nations get an 80% share, the province gets a 20% share. I'll leave it at that. This is tied into the reconciliation protocol agreement. All our nations have signed the agreement with the provincial government. Revenue from carbon offsets was to support the goals of the reconciliation protocol agreements. Just on a structural thing, our limited partnership has agreements with our nations where they transfer ownership of their offsets to us for management and marketing. We as the limited partnership does the verifications each year, and we have to assert 100% ownership of all the offsets in the project area. We also have agreements with the provincial government where they transfer their ownership to us for purposes of verification. Last, one little thing, we also represent and offer these services to non-partner nations in our project areas. So you don't need to join CFN. We'll happily manage and market your tons. And the transfer management agreement transfers ownership, and it sets out how we distribute any revenue from our sales. Next slide, please. This is kind of the legal framework. This just lists, let's start at the bottom. Forest Carbon Offset Protocol is the protocol our projects were developed under. We were developed under FCOP 1, so we're currently grandfathered, and Warren, who would be sitting here, my question to him all the time is, if we're going to go into FCOP 2, how is that achieved? And I haven't got an answer yet. We're a little nervous because we like details. Anyway, that's the thing. And then there's the Act, the Greenhouse Gas Industrial Reporting and Control Act, which kind of put everything in place. And then there's the regulations that actually tell you how to do it. All our tons are issued onto the BC Carbon Registry. It's kind of like a bank. You get your tons in there, and they're tracked so they can never be sold twice. And when we sell them, we either transfer them to a sales partner or a company if they have a registry account, or we retire them. And retirement essentially takes them off the market forever. I guess in early carbon days, that was a bit of an issue. No longer, not with ours anyway. Next slide, please.
Thank you. Just wanted to show a handful of some of our buyers that we've sold to on offsets. They've used our offsets towards their own emissions. The most ideal buyer, whether it be a business or an individual, is someone who is looking to make a difference in the future of climate change, thus our future generations, and has taken every other effort to reduce their emissions. Carbon credits, as we know, are a vital tool as we work through climate change, but they are one tool that should not be used to substitute for emissions can be reduced through business operational changes. We have had buyers throughout Canada, the United States, and the UK. We are active in both the compliance and voluntary markets. In the compliance market, the BC Provincial Government's Climate Investment Branch is our largest buyer, with greater offsets being used to make the province, provincial government carbon neutral. I think somebody has a cold in the background. I hope you're okay. In the voluntary market, we have a diverse portfolio of buyers you can see here. And some of these include TD Canada Trust, Air Canada, and Rakuten. These are a handful. So, you know, we're seeing a lot of transportation coming to us in the market, which is great. That's a huge emitter, as we know. And we do have sales guidelines on specifics, and we don't like to sell to extractive companies. We are realistic that as the future moves forward, that we are seeing emitters who traditionally would not work with Indigenous organizations or nations, we're seeing those changes happen where they're taking more responsibility for their own emissions and for their own footprint. So we are open-minded to what the future will bring and what those partnerships and what those buyers might look like. And maybe our vision will have to change with that. We're aware of that. I'll go to the next slide, please. On the last slide, I want to touch on some of our sales partners, people we have relationships with. This is very important. We don't partner with just anybody. I have not been with our work for very long. And in the short time I have seen offers from what we like to call carbon cowboys come through, offering large, upfront payouts for quite a large amount of ownership, or just bad sales that we lose over time. So we do take it very seriously when we sign with anybody new and we work with them, and their goals and values have to align with our nations. They just have to for us to be able to move forward. Time is limited and we do get to be selective. So again, these are some of our sales partners and organizations who sell and or market on our behalf. As the carbon market expands across the world, we have partners spread across North America with connections in the UK. Some locations include Toronto, Montana, and New York. Each organization we choose to work with is a relationship built on trust and shared values. And again, touching back to our sales guidelines about not selling to extractive industries such as oil and gas, that our partners have to be on board with those same values. We don't allow sales to go out and transfer tons to somebody that we don't know, and we want to know where they are going. We understand that in the market, transfers can happen quite consistently. Our tons could move with somebody else to a purpose that we didn't know. And again, that's why that trust is so important to establish when we're starting the relationship. And we'll go to the last slide, please.
Okay, yeah. So Indigenous-led governance and stewardship supported by durable, self-determined finance secures the well-being and ecosystems across the Great Bear Rainforest and Haida Gwaii. And just to add to this a bit, because we're answering a slightly different question here. Our three projects deliver about 1.2 million tons a year. And remember, there's an 80-20 sharing with the province. What else? I did chicken scratch because I didn't remember. I have a colleague who's better at this stuff than me. Yeah, our limited partnership, the mandate is to provide as much funding to our communities as feasible. And remember, 65% goes directly to stewardship, and that money is protecting the Great Bear Rainforest. Mary Kate said offsets are a Band-Aid, and they are a Band-Aid. They're not going to solve climate change, but in selling our offsets, instead of the Great Bear Rainforest being cut down, and you can think of some of the other presentations about the devastation of the forests in BC. Our nations are working to be upfront. There is still logging going on. The annual reliable cut was cut in half with the signing of this agreement, and it's apparently, according to our lands manager, it's never met so far in the 13 plus years we've been in place. And we feel like I come from the nonprofit world. I was 25 years in nonprofits, mostly social service. And I thought it was really ironic that I've ended up working in a corporate side. I was hired by a nonprofit. Now I'm working a corporate side, but we feel like we're running a foundation that's providing funding to our nations. That's our goal. And that's it. Thank you. Welcome questions. We love talking carbons.
Yeah, well, how about this? The lunch is getting cold, and we haven't moved from our seats for a while. I guarantee some people need to, including me. So let's take a break. Our lunch is only planned until 1:45, but let's take it till 1:55. Okay, so those of you who are online, we'll go to, let me show here. Actually, let's just go till 1, make it simple. Okay, and we're gonna have to break at 4 at the end of the day. Herb, could you give us a brief blessing of the food?
Sure.
Thank you.
Well, smash. Amigas, es con la acción, es menos concrete, une, serem cora. Concrete, skipne, is kin gulma and law, image colloques and high and law, as a host of Savan, Giram and will. Am still will. Amen. All my relations.
Lunch is served out here. Carbon from the Forest Carbon and Climate Services Branch in the Chief Forester's Office. And I didn't expect to find the name of the branch in the Chief Forester's Office like that in my lifetime. That's how much it's all changed. So we're going to start off with a bit of a presentation from Nora and Warren and whoever else. And then we'll go back to our conversation that we were previously having on the path forward. And if the federal system were to apply in British Columbia, which is one of the options, then there's certain capacity building materials that they have And Liz Dykeman is with us online. And thanks, Liz, for making the presentation so late in the day for you in Ottawa. But she will present some of that material as information that we might find useful, or something like it that we might find useful. And as with this morning, we'll try and take questions as we go. And if people have ideas or concerns or thoughts, please share them. So over to you, Nora. And I'm not exactly sure how many people are online, but there was some 40 or 50 earlier.
That's excellent. Can everyone hear me okay?
Nope, not yet.
Nope, not yet. A little bit better now.
There you go, that mic. Speaking to it.
I'm blessed with soft spokenness.
There you go.
There we go. Okay, good afternoon, everybody. Lovely to be here, lovely to see you all. And yeah, welcome back from lunch. I think a few folks are still kind of finding their way there. All good. We'll take some time to get started here. So yeah, so my name is Nora White. I am the director of the Forest Carbon and Climate Services branch in the BC Office of the Chief Forester in British Columbia. I'm here today with the team. We'll get to introductions in a sec. And this is really the team in the Office of the Chief Forester and the province right now working toward that one window approach to carbon offset projects as best as we can. So that's us. So I think many of you over the last day or so have had a chance to at least meet Warren Greaves, who's around somewhere. He's the manager on the team, project managing this work. And also with me here today is Matthew Cresswick on my right here, who is, Matthew's a senior analyst with the team. And then Fatima Mokhtarzadeh as well on my left. Who's an economist who's recently joined our team working on this initiative as well. And just thanks to Alex and FNCI for reaching out as you did just a few months back to start working with us and to show your enthusiasm and your willingness to work with us as we kind of figure out this pathway. So just really thank you all for that. Okay, move to my second slide here. Yeah, so I think before we jump in, many of us are meeting for the first time. So I think at least I'm meeting many of you for the first time. So I wanted to take some time and I felt it was appropriate that we recognize the traditional territory from where we are gathered here today. And I would like to gratefully acknowledge the ancestral territory of the Musqueam, the Squamish and the Tsleil-Waututh nations where we are. It's also where I was born and raised. So it's a special place to me as well. I think it's evident to everyone that for the province of British Columbia, Indigenous reconciliation is a high priority and is actually also a matter of extreme importance to our team as well in the climate and carbon world. So what I've got in the slide here for you today is artwork that's hanging in the office. It's presently my office, but the director of this branch, it's hangs on the wall in that office. And it's artwork commissioned by Michael Blackstock, or commissioned by the artist Michael Blackstock, and he's a Gibson member. And it was commissioned during the 2004 the Canadian Tree Improvement Association meeting on climate change, which is meaningful to my branch in particular, because it really was kind of the kickoff point for the work inside of the ministry towards establishing who we are today and what we're starting to accomplish. So Michael, I understand, is also a forester and an avid explorer of BC's forested ecosystems, and also a longtime employee of the BC Forest Service. So my understanding of this artwork from kind of looking at the back of it and speaking to some of the folks around the office is that in oral history, the raven plays a role in a particular story where the Northwest coastal peoples experienced a significant weather event. So it was said that the drops that fell from the beak of the raven formed rivers and lakes and overwhelmed the people. So this artwork reminds me daily of how closely we are tied as people to our climate. And I think from this story also how climate events have happened in the past. They are not new, and by coming together, we've been able to address and overcome them. So thanks for letting me take the time to do that. Okay, let's shift into today. So I'm also going to speak a little bit maybe on behalf of our colleagues in the Ministry of Environment and Climate Change Strategy, who are, we work with very closely when it comes to creating an offset program in BC. But we'll do that kind of as our first item on the agenda today. We want to provide a bit of a basis for what we're going to share next, which will be considerations for those that are interested in developing carbon offset projects on Crown land. We want to share some elements with you around potential carbon offset developers, and what you might want to consider early on in projects at this stage. And then we want to share where the province is at, of course, in terms of our policy development to support these projects on Crown land. And we really hope to hear from you as well. We are in deep policy evaluation and analysis to get this work out the door and get this operationalized, the word we like to use. So yeah, so that's kind of today. Again, just really happy to be here, and thank you again for the invitation, and yeah, we'll carry on. So, okay, and here's Warren for everyone who hasn't already met Warren. All right, welcome Warren. So before we dive deeper into carbon offset policy, I just want to touch briefly on how it fits within the province's plan for a low carbon transition. So within the province of BC, I think many folks probably know, of course, offsets are made possible by provincial agencies in particular, working in collaboration, including the ministries responsible for leading the Reconciliation Initiative with Indigenous peoples, the ministry leading environment and climate change services and strategies, and the new ministries of both lands and of forests, each of whom work much more operationally to resource agreements and to manage natural resources sustainably. So we provincially recognize the potential benefits of offsets as market-based mechanisms that drive investment into alternative and sustainable forest activities. And we believe that offsets can play a key role in achieving emission reduction targets while driving and incenting clean growth in the economy that is also sustainable. So carbon offsets are part of the Clean BC Roadmap to 2030. That probably is nothing new to anyone here, and we absolutely see them playing a key role in transitioning towards that economy of the future. So as we heard, I think as the group has been hearing for a day and a bit now, offset projects also, of course, carry significant environmental and socioeconomic benefits and co-benefits, including improving livelihoods, advancing Indigenous reconciliation, biodiversity protection. I don't need to list them all, the group's much familiar with it. And so I'm just pleased to recognize, I think that for those of us in the room today, these are all very much shared objectives that we're reaching towards. Okay, so bear with me a bit on this. This is a bit of a fun slide and something that we just wanted to take a minute to do. So it's a mixed group, myself included, about 6 months into the role here. So some of you might be thinking, as I was when I arrived in this role, okay, so this is a complex web. There are a lot of players in this. How do they all interact? What does the carbon offset universe even look like? So just bear with me while I trundle through this. Okay, and Matthew's going to drive the animation. So, okay, first offsets are purchased by polluters, and these could be entities that are either regulated, of course, under some sort of carbon compliance scheme, or companies that are looking to reduce emissions as part of their net zero or corporate emissions reductions objectives. I think we all get that. They purchase carbon credits that are generated from approved activities carried out by carbon offset project developers. And these agreements are typically done privately as part of business-to-business agreements, of course. Projects are completed in accordance with carbon offset protocols and methodologies. And some of these methodologies are compliance grade and developed by governments, aka BC, and some of these methodologies are voluntary grade and are developed by organizations like Verra and the Gold Standard. So I think it's important to note here too that there are more characters in this universe. There are verification and validation bodies. that provide assurance over projects. There are funders and investors, there they are, and speculators observing the market to see where it goes. So quite a crew. And I also want to point out that there are newer groups emerging as well here, groups of experts working to ensure the environmental integrity of corporate pledges and offsets that are being procured. And then there is this, the Crown Provincial Land Access piece. So this is the universe that we see from where we stand in terms of the players all involved in here. So thank you for bearing with me through that. Hopefully, if I've got something wrong, come and find me after the fact. Quickly, just want to shift to the next slide here. I don't think we need to spend much time on this, but the point really is that carbon credits from BC are offered into both the compliance and the voluntary markets. BC, I think as everyone is aware, is obligated by law to be carbon neutral, and the majority of our offset demand is for government itself. So I do want to speak more about that on the next slide. So let's just go straight to that one. Okay, so as you can see here, the majority of retirements on the BC Carbon Registry are from carbon neutral government. So it's interesting to note, I think, that BC saw an 8-fold increase just last year, really, in the number of voluntary retirements, which is significant, but it's still a fairly small amount of volume. It's still a bit of an emerging market. So I think it's important to note that the carbon market in BC is still relatively young, and the volume is still relatively low. That said, though, it is incredibly promising to see the various stages of progress of the proponents. I think that Warren was telling me about the progress being made by folks in the room here toward new projects in BC. And agreements such as the MOU announced yesterday can only help, I think, facilitate projects by setting clear expectations for land use and the desired flow of benefits. So developing BC's market is one place I think that collaborations such as this one here today with international project investment experience and expertise around the table can really help guide the efforts of the province in cultivating a successful and competitive voluntary market internationally. We at the province see promise in expanding this market and are excited to see the enthusiasm for it. And as land managers want to ensure that the feasibility assessments are built on strong, realistic expectations about price and demand. And I think at this point in the presentation, I'll hand the floor to my colleague Warren, who's going to continue with an overview of our soon to be released forest carbon offset protocol and some more of our early consideration thinking for you. You're in excellent hands with Warren. He played a lead role in developing the protocol, and if you've met him today, you'll find is a passionate collaborator. So over to you, Warren.
Thanks. I'm gonna steal this.
Yeah.
I think it's been David and Danny did a pretty good job of summarizing this, but I'll just mention that our offset system is based in legislation and regulation, unlike other voluntary standards. So I think that does offer some additional power there. There is the Greenhouse Gas Industrial Reporting Control Act, which enables offset protocol developing power to the greenhouse gas emission control regulation. There's also 2 other regulations, which I will try and spell out. We have the greenhouse gas emission reporting regulation and the greenhouse gas, I think it's something to do with penalties and administration on facilities that don't share their reports for the large industrial system. Then the piece that's not mentioned there that is enabled by the greenhouse gas emission control regulation is the forest carbon offset protocol. When we were drafting, still in development, still drafting the BC forest carbon offset protocol, there's 4 different pieces that protocol addresses. You may have heard these before. They're the qualities of a good carbon credit. They're real, additional, permanent, verifiable. You may also hear unique. That's often another attribute of a carbon credit, but we handle that through our greenhouse gas emission control regulation, for example. I'll just touch on additionality maybe. We mandate a selection of a baseline and project scenario. And we do that through the protocol. We also require long-term permanence. We also have instructions in the protocol which make all of this verifiable by the third-party verification validation bodies. I think it's just worth noting here, and it's kind of linked to that permanence piece, but there is a 25-year crediting period for projects with a 100-year monitoring period, which makes it fun to do policy development when projects are on Crown land. Some things that I think are probably the most impactful, aside from the setting of baselines for project developers, is two components, which I'll just touch on quickly before handing it over to Matthew. For those of you that are steeped in forest carbon offsets, this is fairly elementary, but basically the protocol accounts for any increases in harvesting elsewhere as a result of the decrease in harvesting in your project. And this equates to a fairly sizable deduction on your projects. The draft FCOP that was released had 42 to 72% of tons, depending on where the project is located. That's a deduction on your credits that are awarded to account for this increase in harvesting elsewhere as a result of the decrease in harvest for your project. And this would be the case for conservation projects and improved forest management. And it's not, we don't view it as like a good or a bad thing. We think that it helps with the environmental integrity of the offset and helps with the eventual purchase of it. Next slide. Another deduction is applied to manage for forests burning unpredictably. There is some sort of, when you are modeling your projects, you are considering some amount of natural disturbance like fire or mountain pine beetle or wind throw events. But we take an additional deduction in the form of a percentage of credits after leakage to manage for natural disturbance risk. And this helps basically guarantee that every credit that you sell has this permanence feature of it that you can market to purchasers of offsets. And we define permanence as 100 years. And I'll hand it over to Matthew.
Hey, everybody. I'll be speaking to some of the early considerations for carbon offset project developers. A lot of this has been covered already in previous presentations throughout today and yesterday, so I'll be going pretty quickly over it, but we will have some time at the end of our presentation for questions, so make sure to think of some while I'm presenting. So some early considerations really simply are just the activity that the potential project might undertake. For example, sequestration, avoided emissions, improved forest management, additionality, as it seems mostly everybody is pretty well familiar with at this point. Does the project face an implementation barrier? It can't be business as usual. No legally required or obligations for reforestation, or there's financial, technological, or other barriers that would really hinder the implementation of a project. Lastly, sorry, I was getting a little. Lastly, is kind of scale. Is the project large enough to overcome a lot of the barriers to initial implementation? The monitoring, reporting, and validation and verification costs can be prohibitive to some smaller scale projects. So really something to consider is the scale. I think this might remind people of our presentation yesterday from Krista, but are the costs versus the revenues to consider. The cost of implementing a project, for example, forest inventory, the different project activities associated with that, say for example, planting trees, the development of the project itself, validation and verification, as well as the monitoring. How does that relate in comparison to the revenue streams of the project, its project size, the price of credits, the volume of credits, and as we were discussing earlier, the timing of credits. Policy development to develop carbon offsets projects on Crown land. So this is where we start to discuss where we're currently in policy development for a vehicle to support the implementation of these projects on Crown land. So we have this tentative pathway for going forward with offset projects. Firstly, something to consider is the feasibility of the projects. It sounds like the pre-feasibility studies that folks were discussing yesterday, it sounds like there is a lot of feasibility going on, and then we go to the initiation of an atmospheric benefit agreement, which we've discussed a little bit today, but I'll be speaking to that in the next couple of slides. And then the agreements for project plans. So the land use decisions, the tenure rights. But I will also be discussing that a couple other slides, as well as the following preparation of a project plan, the validation of the project plan, as well as the acceptance of the final implementation. Then you can get started on the offset. Okay, so forest carbon offsets on Crown land. Essentially, atmospheric benefit rights outline the management of carbon rights for projects on Crown land. So this is the agreement that specifies how much of the carbon in the atmosphere is sequestered or reduced through reduced emissions project. The project must be supported by a land use decision that adequately defines project lands. We do have some additional guidance forthcoming on the atmospheric benefit agreement process that we'll be sharing soon. I can't give a definitive date, but soon. And on Crown land, atmospheric benefit agreements are between proponents and government are required as part of the forest carbon offset project. And this image here is just relating back to that last presentation with the atmospheric benefit sharing agreement with the coastal First Nations for the Great Bear Rainforest. So initiating an atmospheric benefit agreement, this is where the Office of the Chief Forester and the Forest Carbon and Climate Services branch comes in. Proponents are encouraged, not just proponents, potential proponents are encouraged to contact the Chief Forester's office if there is interest in developing an APA for a forest carbon project on Crown land. We encourage you to contact Nora White at gov.bc.ca just with an email stating that you intend to initiate or are interested in negotiating an ABA with government. We will be sharing this slide deck a little bit later, so don't worry about taking down everybody's email addresses yet. And where some proponents might be engaged in a reconciliation process currently, they're asked to CC Rob Drasky, who a few folks here might know.
Can we, I think Gary wanted to, do you want to ask a question? Sorry.
Yeah, I want to ask a question about the continued use of the word proponent. When the agreement that was shown was the agreement between the province and the First Nation.
Sure. Is that okay? Or do you want?
The question I asked in the room, sorry, was the continued use of the word proponent versus the example that was shown on a previous slide was an agreement between the province and a First Nation. And so I see a lot of these as being agreements with First Nations and just don't like the word proponent. I'm sorry.
Thank you for that.
Yeah, I think in that case, we're just using the definition that's in the greenhouse gas emission control regulation. So it's like a legal term, but we have heard that feedback before. So yeah, we appreciate that.
And there's a question related to it. Are you anticipating entering into atmospheric benefit agreements for projects on Crown land with entities other than First Nations?
We could. That's one of the cases with the Cheakamus Community Forest, I believe. There's folks on the line, I believe, that were supporting that project. But I think in that case, that was a joint venture between a local government and a First Nation. So there could be some sort of partnerships. It doesn't necessarily always need to be like with a single First Nation.
Right. Did you want to say something?
Yeah, the Cheakamus is the local nation, the Little Lock Nation, municipality of Whistler, and there was one other. Squamish.
Yeah.
The town.
Yeah.
Not the nation.
Oh, the nation.
The nation. Okay, thanks. Okay.
Okay, thank you for the questions. Oh, got another one.
I got a question.
Yeah,
Oh, two more.
I got a mic. Okay, you're next.
Do you want me to write?
Thanks. So I'm actually a little confused. The BC government, the Ministry of Environment helped develop a protocol that's on Vera, BM0034, the Canadian Forest Carbon Offset Methodology. Now you've got FCOP. I think the real question is the intention of FCOP or the intention of the BC government to restrict the ability of First Nations to generate credits only through BC's protocols? Or are you going to give First Nations the ability to generate carbon credits from improved forest management, avoided deforestation, et cetera, through any international protocol, including the voluntary market? So will BC compete with the international voluntary registries like Vera to provide protocols, registry services, verification, guidance, et cetera? Or do you just expect the First Nations to use only your methodology?
Maybe I'll just start and then I'll open it up to the team. I think the short answer is that's yet to be determined, is really the short answer. Totally appreciate where you're coming from and we need the clarification on that sooner than later. I think there's a lot of questions in that government needs to continue to address, and in partnership as well with other agencies that are involved in the upcoming FCOP as well, implementation. So yeah, I might need to leave it at the short answer for now, but it's a great question and one that's totally front and center on our minds. And I see another hand go up related to this, but I know there was another one down here.
Yeah.
Follow up.
Could you talk briefly about why does BC need its own protocol and what's the benefit over the ones that we know, such as VCS? Could you talk about that, please?
I can't, well, I'll actually offer to Warren. Would you like to start that one?
Sure. I don't know how helpful it'll be. I know that there are several BC specific considerations in the forest carbon offset protocol. I think what we're talking about is different access to different types of markets. One is the voluntary, the VCS, and the other one is the BC offset system. Can you hear me? Sorry. Okay. Okay. Yeah, there are different attributes. I know that from the perspective of the Ministry of Environment that is drafting the forest carbon offset protocol, there was a real inclination to make sure that we got environmental integrity right. And so that's what guided policy development, and that's what guided the drafting of the protocol. So I think having the government being able to hold the pen on that allows for the inclusion of that. I don't think any of us are positioned to say one is better than the other. I think I would leave that to other groups.
Was there any consultation and engagement with Indigenous people before you developed that protocol?
Yes, so there was a 60-day engagement period that actually ran like 6 months because we kept getting feedback. We took all of the feedback. We held over 13 different meetings with different folks that wanted to meet. We received 56 submissions and over 500 unique pieces of feedback, and we rolled all that up into what we heard document. And I'd be happy to share that with you, or we can even talk about it at some point if you'd like.
The big question was, for those of you online, whether there was First Nations involvement in the drafting of the protocol. I just want to come back to this discussion, and then Herb has something to say, but it isn't related to this discussion. We're just going to finish this and we'll go to Herb, okay? And Ryan, if you're talking about what we're talking about right now, then we'll go to you next.
So Alex, do you mind if I just tap quickly on to Warren's answer there, which is just to say that, so he's speaking kind of from the Ministry of Environment's perspective on that and partner with us and all of this as well. But as the carbon offset protocol kind of emerges and is out there for all to see, we absolutely are continuing on with that engagement process. And right now we're looking at how we can set up more regional tables and find out, keep that conversation going about it and not shut the door on it. So there'll be more forthcoming from us, that our team's helping to work with other agencies on that process as well. So the conversation isn't over.
Okay, so I just want to nail down this point about whether or not nations will have the opportunity to develop projects using alternative other protocols. And you don't have the answer to that, and you wanted feedback today. And I'm not in a position to give you the feedback, but I can give you the sense of the meeting, and then if anybody thinks differently, they'll just jump up and say something. I'll be good too. So nations are learning about voluntary and compliance. We're all learning about it this morning. It's very complicated. It's getting more complicated. I think the idea, there wouldn't be a downside for a nation to have the opportunity to develop a project using a different protocol or standard. And there wouldn't be a downside for them, and there might be an upside. And there would probably be a downside if the province said you can't. So I think this is something that the nations need to think about. But in terms of the evolving policy framework, it's not just about what FCOP says and what it doesn't say. It's questions like this. What are there going to be options? And the nations are very interested in developing their projects. And if they want to use Vera, then there better be a good reason why they can't, I would imagine. Ryan. Okay. We're gonna stay. I just want to stay on this topic because Herb's waiting patiently and he has a different thing to talk about. Okay.
Thank you. I'm Ryan Mackay. I'm a strategic planner for Soto First Nations. So I'm going to try to be nice by saying this. But in the world we live in, I just would caution you to use language like allow or what have you. So when we're talking about markets and whether you'll allow First Nations to access other markets, it's almost offensive. So I'm going to say that in the nicest way I can, but that's all.
Okay, we're gonna go to on the same topic.
Yeah.
Okay, can you just say the point?
Yeah, I'll try and be brief, but and maybe I can switch it into maybe a more positive way. I'll grab the mic. Yes, it's part of question, part more of a commentary, because I think we're at an interesting pivotal point. And I'll just regress just for a second. And so folks who may not know, I was the former deputy minister in government. I was the CEO of the Pacific Carbon Trust, and was around in the days when we started this in 2008, 2009. And at the time, and we saw it today this morning, the emergence of this market required strong provincial leadership to step in to ensure we had quality, ensure we had integrity, and to start this thing moving. What we've been seeing today is a pretty significant shift in the market, and one that's happened, quite frankly, over the last 18 months. And in that context, in that world context, I think we're getting a little out of step, and I think we need to rethink these. Point one. Point two is the world has shifted in the world of reconciliation. It makes some of these kinds of assumptions we're making and approaches we're making at best tone deaf to where we need to be going. And I'd probably suggest that there's a fabulous group of people here that could probably come together and provide some directions, some solutions, some options that could help inform a decision set that I think would get to a place where I think the province would benefit. I say province collectively, all of us, all First Nations, all British Columbians can benefit through this emerging market that I think has the opportunity to drive significant international revenues into the province, into First Nations, in a way that has a massive climate impact and massive benefits to all kinds of other communities. And I think that's the opportunities in front of us. And I worry we make a misstep because we're holding on tight to an old paradigm that may not be applicable anymore. And I think that's the place we're at right now. I don't know what that new answer is going to be. I'm not sure what it is, but I bet you there's people in this room, we got some of the smartest folks here, a ton of people working on this could help with that. So I think if there's a way of getting some of us maybe come around and, help through that, and maybe a subgroup or a takeaway we could do around that I think it could get us there. I think you're hearing today some significant concerns. If we go forward blindly on this and we release something, it may have a more of a negative impact than a positive one. I don't think any of us want that right now. So I offer that as a suggestion.
Okay, thank you. Yeah, I do the same comment.
Same.
Okay.
Real quick,
Heard this being, I mean.
Okay. Sorry, thanks for your patience. I'll be quick. I just actually want to tack on to what you just said, which is great segue, which is to say that we deal with a variety of buyers in the voluntary market from around the world, and from their perspective, Vera is the gold standard. Even gold standard is also the gold standard. No pun intended, but it's difficult for a buyer to assess something like FCOP, which from a global perspective is like a tiny provincial government in the middle of nowhere. No offense intended, but that's how it's perceived. And the fact that it's government run with the highest of integrity is all true, but doesn't really help in perception. So for a corporate doing due diligence on credit purchases, from their perspective, they, if it's got Vera or gold standard label on it, they know it has a certain degree of integrity. Whereas for something like FCOP, which is run by the BC government, they would have to go and do a whole new set of due diligence on the standard, on what it does, on what its requirements are, and the process is to make sure that it is at the same level that these other standards are. And so they sort of disqualify these credits. So, even though obviously internally the province is doing good work, the way it's perceived around the world would probably shut these credits out of the market unless they're on Vera or gold standard or one of the others, which would, have not, as you said, have a negative impact on, funding that could flow into the province, but also have a negative impact on what the First Nations are able to get for their credits and the opportunities available to them for selling. So they'd be restricted pretty badly, I think. That's all. Okay, over to you. Thank you.
Okay. Lots of messages there. There you go.
Thank you. My name is Herbert Morvan, and I'm in Scott. One of the things that I see whenever we receive a presentation, especially from government, they never tell us where we came from and why they're doing it. That picture you showed in regards to this beautiful forest that's going to help us. That's a place where we want to be. But yesterday we saw the starkness of the policies that this government allowed to happen to deforestate all of or most of our land. Yesterday we saw that. I would have liked to see this is where we came from. This is why we're doing this. And this is why we would like your support. Because the starkness really jolted me. Because I used to be a logger. And one day I walked into our house, or our mother's house. I said, Mom, those companies are still raping our lands. And she said, don't you dare lie in my house. Get out. You're lying in my house. Don't ever bring that in here. I was working for the company that I was talking about. Thinking that the reason why we're doing this because it's the best way. That's how it affects us as a people, even in families. The government policies that they initiate takes that and drives it so that we become complacent. with what is going on. When I arrived in Vancouver on Monday, because of my age and I got a little bit hurt, I decided I would ask for a ride from the gate to where I was gonna pick up my bag. And a lady was driving. And I asked her how she was doing. She said, "Oh, I'm doing real good." I said, "Where'd you come from?" I said, "Terrace." And she said, "Oh, I played softball up there, the provincial championships. And I love that country up there. It's so beautiful." She said, 25 years ago. I said, "You should see it now." She said, "Yes." I said, she asked me where I was going. I said, "I'm going to where we are going to be discussing about climate change. What is our responsibility in this climate change process?" And she said, "Yes, we're so good at adapting as a human being that we become complacent in our attitude towards our responsibility to maintain the world as we found it." That's the kind of conversation that we should be having as individuals. Get to the truth. Tell us your truth. Show us your truth. This is where we did before. This is where we want to be, and we need your help. We don't hear that from you. You say, "This is what we're going to do. This is why we're doing it." But you never show us why. And so I wanted to speak to that issue because that picture that you showed, I started to feel complacent because it didn't show us the starkness of the responsibility, why we're doing it. All this morning, I was listening to the presentations. And this is my question to myself. Is my buying a carbon credit my commitment to curb climate change? Or is it just my relief from doing what is right? That was the question I was asking myself this morning. I wasn't looking at you. I was looking at me. Where am I going with this? What am I going to do with this? How am I going to apply it to my life so that it has deep roots to nurture goodness? That's where I was. Haven't found an answer yet, but I'll continue to work towards it. Thank you.
Thank you, Herb. So as we contemplate the magnitude of Herb's thoughts and we try to get onto a good path, there was some suggestions made, which I think are kind of in keeping with that. That there's a desire to work together with the provincial government to help get it right. And one of the questions is not just the actual content of the final protocol, but whether other protocols can apply. How do we develop a system that enables the right intentions that Herb was just referring to, and keeps the cowboys out of town. So maybe we can carry on, or you have something you'd like to say? I guess maybe just to pick up on Scott's point presentation, which others I'm sure agree with, that this is a forum. And you can see there's a lot of people here at their own expense. And so if you set up a roundtable or something next month and invite half of them to come and have the conversation that you could have here at a place where it's been created by the nations, the question would be, well, why did you do that? Why wouldn't you also, I mean, you might do that for other nations who aren't here, but there's a forum here to work with and an invitation to work with them. And we're not going away just yet. So, and I mean that in the most welcoming way. Okay.
All right, well, thank you everybody for the comments. They were all, I know they were all sincere and come from a good place, and we do very much appreciate that. We are all still learners here in government, and I definitely know we can take a lot away from just the comments that have been shared so far. So I thank you all for those. Just to finish up this one slide here, and then I'll turn it back over to Warren. So once you connect with the Chief Forester's office about a prospective proposal, we'll follow up with you. However, we do note that we aren't able to finish the ABA process until FCOP is published. So throughout the FCOP negotiation, the proponent, which in probably the case of this room, First Nations and communities, will be confirming the attributes of the project, a lot of the feasibility elements of the project, a lot of the kind of back and forth to make sure that project fits within FCOP and is a good fit. And we will, the Chief Forester's office anyways will inform and need to be informed about other, sorry, blocking my screen there, of other planning efforts underway on that land base as well. And with that, I will turn it over to Warren.
Yeah, and when Matthew talked about other planning processes, we're aware that there's a variety of different activities that are being suggested using a variety of different mechanisms, and we'll talk about some of them today, but we realize that it will be the Ministry of Forests working in conjunction with our partners in regional offices if you're already connected with some of those. So just wanted to mention that too. So I think as part of this forum and coming here to get some help, I think we would like to hear some feedback from you, and we're kind of coming pretty palms up on this, and I think we're happy to share some early thinking that isn't fully baked yet. So we have a ton of caveats, but these are some of the things that we're considering. I think the biggest caveat is that not all of them may work for the projects that we need. We recognize that there's a lot of projects that want to get started now. And so that requires the use of legal tools that we have now. And not all of them are perfect. And so this slide is showing some of those tools and why they aren't necessarily perfect. We think that one of these tools is under the Forest Act, and that's the use of probably an area-based tenure with an additional protection that's maybe question mark provided through an Environment and Land Use Act order or some other sort of ministerial order. And that would be for each individual project. The reason for this is the exclusivity on the Crown lands and the long-term permanence on those lands isn't necessarily there with a conventional tenure. Another option is establishing a land use objective under the Land Act. Question mark again, we're not exactly sure if this offers the permanence or the exclusivity that's required for these types of projects. The other option as well that we're considering for projects where there's 100% reduction in harvest or pretty close to that is the establishment of a conservancy under the Park Act. That could be one option as well. But again, it does create some additional restrictions on it. It's not great to harvest in parks. So if there is some sort of improved forest management happening in your project, that might not be the tool for it. So all this to say is we're considering all of these. What we hope to have at the end of our process and our analysis, and after you've, if you want to weigh in and send us some feedback, but after we've fully gone through all of that, what we hope to do is release some guidance to hopefully paint a clearer picture for projects that are looking to establish on Crown lands so that they can have a bit more clarity as to the exact steps that need to take place. Maybe just if we could go back, maybe actually just one slide, just checking around the room to see if maybe there is any feedback right now, or we can return to this.
There's.
Okay.
And I'm deriving this from the previous conversations that we had with you and when you weren't here. And if anyone wants to adjust what I'm about to say, you'll do so. So if you go back a few slides to the one that's got all the boxes, not this one, but this one. So that sequence of steps, there's some potential problems with it. And I don't know what a feasibility study costs, but people throw around numbers like $200,000 more. And so if you were a nation that was going to finance a feasibility study, or you were a carbon project developer in partnership with a nation who's going to finance a feasibility study, and you didn't know whether or not the atmospheric benefit was certain. I mean, the ownership of the atmospheric benefit, would you spend the 200 grand? And so one of the things that we talked about before is just to this is kind of a similar sequence of steps to what we had before, but it's different, and it's different in a couple of important ways. So I'm just going to remind everybody what those 4 steps were. That's as far as we got. The first step was just awareness. And I would say that the 7 nations involved in this process have completed that step. The second was values and pre-feasibility. Why do we want to do this, and what would it mean if we did it? And that's the one that was reported out on yesterday. And then the third step was clarification of rights. And I mean that in a respectful way, recognizing that terminology like Crown land with First Nations isn't necessarily the most best terminology. You mean unextinguished title land, or we could say things like that, but this isn't the purpose of this forum. It's just to say we need to clarify the rights, and the rights are the rights to the atmospheric benefit, so that if there's a project developer that's interested in putting $200,000 on the table, or a nation out of their own resources, they want to know that that's going to get sorted. And the second is the competing Crown tenures that might be in the way or prevent implementation of the project. And then the fourth step, we didn't spend a lot of time on it, but hopefully some of you will recall it, was agreement in principle. It's kind of like, maybe we haven't got the agreement on the atmospheric benefit completely inked, and we haven't completely sorted out the tenures, but we have a sufficient expression of goodwill to do that we all know we have sufficient confidence we are going to sort it out. So then you could, if you had all of that, then you can start to proceed down this path with a bit more confidence that you're gonna get to the outcome. The last thing I'll say is kind of reflective.
Oh, you fuck her.
Is that Jim? What?
I don't think so.
No, okay. I'm gonna assume that wasn't directed. These hybrid meetings. So the third point, if you go to those 3 boxes. Okay, so we had a quick presentation from Great Bear Rainforest. And you know, like a lot of people, some of the people in this room and some of the people online, I was involved for many years in all of that. And there wasn't just these 3 pathways. And that the government on the other side of the table, that is the First Nation government, needs to make similar kinds of decisions. What those pathways are about is managing future provincial governments' allocation of tenures that might be inconsistent with the commitments associated with the project. So if you don't create a park act tenure, some other government might allocate it to some mining company or some logging company for a forest company, and there goes your carbon project. So you're actually managing the allocation of future Crown tenures through Crown legislation. And I think if we go back and look at the history of the Great Bear Rainforest agreements, there was about 5 of them. Those were all government to government agreements, and which would now be government with government agreements, where both governments are providing assurances to each other that we're going to stick with this over the long term. And we're going to, whatever, so if it was the Niska government, they have a whole legislature that they would use. Other governments have different mechanisms to use their own legal mechanisms to provide assurances to future generations and to investors and everyone that this is solid because we said so and you said so. And you use your tools, they use their tools. So, sorry, I kind of stepped out of my role there. But it was based on what you've been saying, okay? Okay. So bit of feedback. Anybody want to add or modify what I just said? Just in case I inadvertently made a misstep. Okay. For the time being.
I have
Have a little something. Okay.
Thanks. Just my comment is where there are projects that nations are ready and able and can show additionality and can move this forwards, and this goes for all of Canada. I think it's the provincial government needs to step aside and needs to enable those to happen, because it's so much has happened in order for a project to have come together. I think the province cannot, and this isn't just like BC, you're probably further ahead than anywhere else, but all over Canada, this is happening, that provinces and territories will not enter into agreements and will not step aside and allow these projects to move forwards. And if that could happen, we would have natural climate solutions led by Indigenous people all over Canada very rapidly. So that's my only comment.
And as a follow-up to, and I don't want to put anyone on the spot, you don't have to answer, but I'm looking to some of the project developers, and when there's like the thinking around property rights and the ownership and that sort of thing. And maybe we should be talking to someone from a verification validation body as well, but just thinking like what fits and what is that definition that is in alignment with FCOP that gives that long-term permanence, but also clarifies the property rights. And right now, I think we're looking at legal tools as like the clearest form of establishing property rights, but we're open to input about other tools.
And that doesn't just need to be today, so that's an open offer for us, or, I mean, our internal processing of this is still, we've still got a bit of a ways to go, so lots of work in-house for us. So I think that feedback would be welcome at any point when the group's ready to give that, or if it's individuals, you know where to find us as well.
Can you say who you are?
Yeah.
Thanks.
Martin Baker with Anew. I don't have initial responses to that right now. I appreciate the opportunity to take it away and think about it. What I would say is that in these pathways, you're trying to address carbon rights and permanence together. Those can be decoupled, in my opinion. I think carbon rights can be assigned, and I think permanence can be quite creative. And I think, you know, nations can maybe present their own options on what permanence is and looks like, without the government needing to dictate the options around permanence. So I think trying to split those two, because they're both huge issues, but I think they can be, there's different solutions, and by bundling them, I think we're falling too much into the trap of trying to look specifically at what the legislation can offer. Yeah, just to clarify, yeah, I think, yeah, we're still looking at a requirement for an atmospheric benefit agreement, and then this is on that, the what's happening on the land piece, yeah.
Maybe I could just make the earlier point a different way. You think about 100 years. If you look back 100 years, or even 20, and think about how have First Nations title and rights evolved and been recognized over that period of time. And ask yourself, you know, just think about the Chilcotin title lands. You think in the next 100 years there's going to be any more title land in British Columbia? I'd be, you know, I'd say the answer probably yes. Pretty strong likelihood. And so if the only statutes that you're using to create the conditions that can implement these projects are provincial statutes that don't even apply on title land, it could be a problem. And so if we look at the Great Barrier Rainforest experience, we see government to government agreements each step of the way that were agreements on what tools to use and the agreements between the governments on their intentions. The same kind of thing should be up here so that everybody knows that the relevant governments with jurisdiction and title are on board. And there's a commitment, a reciprocal commitment to make this happen.
Just maybe quickly respond to that. I think that's a really good point, Alex, that you just made. And our approach.
I don't think you're
not hearing me?
Yeah, yeah. Just,
yeah.
Can you just introduce yourself again? Because people on the screen in the virtual environment don't necessarily know.
It's Nora White, Director of Forest, Carbon and Climate Services for the province in the Ministry of Forests. Yeah, great point. And I think it's something we're absolutely, of course, that's something to entertain and consider, and we need to keep working with this group and others on that. What you see on the slide here is maybe more of a short-term approach. This is kind of the, like, there's a group of, you know, folks in this room representing projects that are ready to go. And in the time that we have and in the systems that we have today, it will take us longer than you probably want to wait, even working together to get to kind of what you're describing, I think. So I do like what is being described there. I think that's an excellent vision for us to pursue in the longer term with these projects. But for the short term being, what we're showing you here really is the cursory thinking about how can we make some of these things happen as fast as possible. And these might not be in any way the long-term solution. So just something to keep in mind as you're kind of giving us some feedback on what we're sharing here.
Hi, Jason Smith. I'm the technical rep for Halfway River First Nation. I wanted to pick up on points that Mary Kate made and Alex made, and kind of the short term versus long term, so a bunch of stuff that we've talked about. So I think in the short term versus long term, that's how I read this initially, was that it was a stopgap measure. I think you mentioned that on a call we had back in September or something. I think it'd be good to reiterate that every time we talk about this, because that's important. And even, if any projects were developed under one of these pathways as a stopgap measure, that there'd be potentially language in there that would talk about working towards a longer term agreement on what the broader objective is. So I think that's all good stuff. The other thing I wanted to bring up was kind of about and maybe it's related to this as well, as the timing issue that Alex brought up, and that's back to the slide that had all the little squares, started with feasibility. And that order, when it's working with Indigenous communities, feels overly paternalistic. I think it should start with the initiation of the ADA and the Agreement of Project Lands. Like, how are we going to give the nation the set of rights, as Alex talked about, that they need to make the decisions they need to make for their land base? And then because you don't need a feasibility to say we will share whatever rights come out of it. And so I think that needs to be reversed. You need to get the rights in place first.
Yeah, this is like the hypothetical sequencing. Currently right now, in the way we're drafting a feasibility assessment is not required as part of like developing an atmospheric benefit agreement.
Okay, and that's all I want to say, just kind of rethink about the order of that, and think about giving the control of the nations to make the decisions and how the province can partner potentially. I think it's heard that said, how can you help each other get to where you need to be?
So maybe I can just pick up on what Jason just said, and clarify that I didn't mean to suggest you don't need to use provincial tools to manage provincial jurisdiction. You do, no question about it. It's just that that's not enough. There needs to be both governments using their respective tools to make it happen. And that government to government commitment up front, government with government commitment can be very, it doesn't have to be some massive agreement. It's more of a mutual commitment to move forward. But it's just the point that Jason just made, and the stage we're at, I'm just kind of skipping ahead because it's 2:15. It's like, what are the next steps? And one of the next steps could be, and arguably should be, to start working on the atmospheric benefit, clarifying that, because we don't need to have exactly figured out what the nature-based solution is going to be specifically. I mean, we have pre-feasibility work that's done by the nations already. Some of them are eager to get going, and having the atmospheric benefit sorted out, even though we don't have the 10-year worked out and exactly the feasibility study hasn't been done, there's nothing preventing that from happening. And so it's one of the things that we could work on together while we talk about some of these other issues. And it's the type of thing that could be done while it is going to be an agreement between, the provincial government and the First Nations government, the relevant First Nations government or governments. These are going to be public agreements. We're not going to want like 16 variations. It's going to need to be something that people generally feel like everyone's being treated fairly and reasonably. So this is a good forum to, as the nations have said before, this forum enables them to work on their own interests, informed by how other nations are seeing the same problems and trying to resolve them. So just a suggestion on kind of next steps. It is too. Who's facilitating this meeting? This has been a very good discussion. So are you at the end of your presentation? I do have one more.
I had some prompting questions, but I think we got it.
Good. Well, I really apologize to Liz, who works with ECCC and where their jurisdiction applies, because there isn't a program, an offsets or all the things that David said, just to cut to the chase. They have a bunch of material that could be quite helpful to us. So just to kind of bring this to a conclusion, let's just say we're going to have another conversation tomorrow about next steps. One of them, I'm sure, will include further collaboration with yourselves to kind of sort out some of these policy questions, like why not other standards applying in BC, as well as how do we advance the atmospheric benefit, the clarification of atmospheric rights with the nations, so that they can have conversations with project developers if they want to, or just pursue them themselves, knowing that that issue is resolved. Maybe there's a two-step, maybe there's an agreement in principle or something like that, I don't know. But let's just commit that we'll do that together and sometime in the near future, and as a follow-up, if that is okay. Or maybe.
That sounds fine, Alex. Yeah, thank you.
Okay, great. So Liz, we are even keen to hear from you. Is that okay if I give it to Liz, folks? All right. Thanks, Liz. It's 5 o'clock in Ottawa.
Actually, I'm joining from Treaty 1 territory in Winnipeg, so no worries.
Only 4 o'clock.
Yeah. And thanks very much for the opportunity. I think Shanda has my slides, and I'll just condense quite a bit to try to make up some of the time in your conference. So I'm Liz Dykeman, and I work for the Offsets and Emissions Trading section of Environment and Climate Change Canada's Carbon Markets Bureau. And I'll just present an abbreviated version of a few slides about how we're trying to facilitate Indigenous participation in offset projects. So I think, Shanda, if you move to the next slide. So some of the comments yesterday were about the need for learning and for First Nations to better understand what offset projects are, the opportunities that they can present, not just for GHG reductions and economic benefits, but also for ecological and cultural benefits, particularly for nature-based projects. So we've kind of heard comments like that before, and wanted to be able to support First Nations that might be interested in participating in offset projects. And I did just want to mention sort of at the outset that the federal offset system applies nationally, though it's designed to complement rather than compete with offset systems in the provinces and territories. So federal offset protocols aren't applicable in a jurisdiction that has an offset system and has a protocol for that same project type. So that kind of is what determines whether the federal offset system is applicable or not, and rather than whether the federal backstop applies in that jurisdiction. So it's about the overlap of protocols rather than the backstop. But as I think David Stevenson mentioned, there are opportunities for provincial credits to be used in the federal output-based pricing system for compliance in that pricing system and in that market if they're from offset programs and protocols on our list of recognized programs and protocols. So with that sort of framing of how that intersection of the federal and provincial systems works, I'll be very quick on my next couple of slides. So next slide, Shanda. Just that we have launched our system, it's called Canada's Greenhouse Gas Offset Credit System now, launched in June with regulations, our first protocol, and the credit and tracking system. We also issued a discussion paper about how we propose to facilitate Indigenous participation in our system. It laid out measures we've taken to date and some additional proposed measures that we were seeking comment on. So I won't get into too much detail about that, but you could take a look at the discussion paper, and still interested in folks' comments on that, though the comment period was done in September. Next slide, Chanda. So I was also just going to mention how we're involving Indigenous participants in the development of our protocols. So that's been through offset committees that kind of look at those cross-cutting issues related to all project types. And then we have had, in particular, a First Nations protocol focus group, the development of our improved forest management protocol. You could move to the next slide, Shanda. And then there have been comments during your conference about the need for capacity within First Nations to understand better what offset projects entail. And we're hoping that we can help facilitate, as I said, either projects that are led by First Nations or in partnership with project developers, but we wanted to make sure that there's information out there. So we developed this GHG offsets toolkit. It's developed not just to apply to our federal system. Of course, we want projects to be registering in our system, but we wanted to be able to sort of provide information that would be helpful for communities looking to participate in any offset system, be that a provincial system or a voluntary system. So we developed this toolkit. We hired an Indigenous design company to help us try to make it engaging. And it's been translated into Ojibwe so far, but into 2 other languages that we hope to post soon, to have those fact sheets in the toolkit available in other Indigenous languages as well. And I've got a URL there, the address there, and I'll post it in the chat as well if you want to check it out. Next slide. So just to provide a bit of information on what the toolkit contains. So it provides a little bit of like Carbon Markets 101, an explanation of what offset projects are, the benefits they can provide. And then it also lays out the steps required for developing an offset project. That's what this slide shows. We know that there's considerable interest, and we've heard a lot about that over the last 2 days. And we want to help First Nations make informed decisions about participating based on a good understanding of what's involved and what the risks and benefits are. Next slide, please. So I'll just end this presentation then with my contact information. We want to be able to support First Nations that might be interested in participating in offset projects. So I'd be happy to connect. And thanks again for the opportunity to speak.
Any questions for Liz? I have one. Excuse me. It has to do with what we were just discussing, atmospheric rights. How, if there isn't a provincial, if the federal system applies, how do you sort out the atmospheric rights?
So our first sort of land-based protocol, the Improved Forest Management Protocol, we've focused the first version of it anyway on areas where that pathway for showing entitlement is clear. So private land and any lands where Indigenous entitlement to use and occupation of the land is clear. Treaty land, entitlement land, First Nation reserves, be that under the Indian Act or First Nation Land Management Act, and any title land or land that's owned by a First Nation. So we are, and we said this in our discussion paper, looking to work with the provinces and territories to find those pathways. And I think the atmospheric benefit agreements that exist in BC are kind of a good example that we're starting from to find those pathways, but it does involve working with our provincial and territorial counterparts, and we hope to involve Indigenous perspectives in that as well to find those pathways. But and I think has been discussed at length, that is kind of one of those points that needs to be worked out for projects to happen on those public lands.
Well, thanks. And just a follow-up, two of them from our previous discussion about voluntary versus compliance and the associated protocols, and whether or not in the system that's emerging in British Columbia, nations are going to be able to use different protocols on their lands in collaboration with the province. What's the story with the federal system? Do you have to use federal protocols, or can you use Vera, for example, or another voluntary protocol?
Yeah, so to register in the federal system, you do need to use a federal protocol. And we've got 5 under development right now, and plans for additional protocols in the future. So we hope that there will be lots of opportunity using federal protocols.
And just the last question, and this may not be a question you can answer, or maybe the Niska can. Niska treaty land is owned by the Niska. What prevents them from just proceeding with a offset project under any protocol they want? I don't know if the atmospheric benefits were sorted out in the treaty, but I'd be surprised if they weren't.
So we have been working with our counterparts and our colleagues in Indigenous Services Canada to make sure that they understand how what offset projects are, first of all, and then so that they can help facilitate projects on reserve land, on tidal land, or on Niska land, where that's clear. We don't prevent those projects from taking place if they were wanting to happen or to participate in a voluntary offset program. Certainly, we wouldn't be putting any barriers in the way.
Okay, thanks very much for, oh, sorry, here we go.
Hi there, I'm Martin Baker from ANU. Back to the same question about reserve lands and treaty land entitlement areas. For those provinces, in fact, for any reserve or treaty land entitlements, we do now have a Canadian voluntary protocol by the American Carbon Registry, which explicitly says in there that they will accept projects on reserve and TLE lands. Are there any barriers to those groups taking projects into voluntary markets? Or is this something that the federal government needs to do or implement? Because my understanding is that pathway is there.
Yeah, we see that pathway definitely being there. And when I say we've been working with Indigenous Services Canada, we're trying to make sure that there are no barriers, that they understand, what's involved in an offset project, be that voluntary or a compliance-based system, and that the processes for projects to happen on reserve or treaty land entitlement are based on the nature of the project. So under the Indian Act or First Nations Land Management Act, there are mechanisms, and it's very much related to the nature of the activity rather than it being an offset project. So we have been working with them to make sure that those pathways are clear, and that there are no additional barriers to those projects happening.
Okay. All good? Oh, go ahead. Hang on, is it a question? I can repeat it for you. Do you want me to-
Yeah, it's a question.
Okay, go ahead.
The federal government's area-based indigenous conservation areas or measures, how does that connect to the protocol?
So the question is, how is the federal government's area-based conservation measures? Indigenous-led conservation measures, I guess, in the indigenous protected IPCAs as an example of that. How's that connected to the offsets program?
Sure. So I didn't get into a lot of detail about this because I was cognizant of the time limitations. But one of the measures that we proposed in our discussion paper was to examine how Indigenous involvement could decrease the level of risk in a project, and that could be incentivized by therefore reducing the number of credits that are held in what in the federal system is called the environmental integrity account. So we're seeing the linkages there where, say, an Indigenous Guardians program is involved in monitoring a project or an IPCA is in place, that has reduced the risk of reversals and therefore can lead to more credits going to that project. And happy to discuss sort of, it's not all completely worked out yet, but that was one of the things we proposed in our discussion paper and got some comments back on and are looking at how that can work. So it's sort of in the development phase, but we're looking at those linkages between Guardians programs, IPCAs, and offsets and ways to incentivize good connections and synergies between those various initiatives.
Follow-up, okay, go ahead.
Hypothetically, we're there, we got the project going. What's the federal position on, are they looking at purchasing the offsets directly? Or are they facilitating these projects to be participating in the global carbon market?
So the gentleman has a project ready to go. And so under the federal system, does the federal government purchase the offsets or what's the story?
So there are a few different sort of markets for credits, and we have been exploring and putting in place ways to expand that market. So examples are the use of credits in the strategic assessment of climate change, federal government use of credits for greening government initiatives, and the other one is going to slip my mind. The net zero challenge as well. So while the primary sort of market for federal credits is related to the output-based pricing system, which has been discussed at other sessions, but the use of federal credits is not limited to that, and there are many other sort of markets for them that are emerging. So one of those that I mentioned, the greening government, would be the federal government purchasing credits, and we have kind of tried to encourage that. And in the guidance internally, it's like, you should use credits from Indigenous-led projects. But as I say, it's not direct purchasing just as emissions reductions, say to meet our target at this point, but there are various markets available to sell federal credits into.
Okay, thank you. Alistair, do you want to just say the question and I'll repeat it?
Will the government sign a letter of authorization allowing the credits developed to be sold into the international market under Article 6?
Any idea what, did you hear that?
I think so, but maybe you want to repeat it for people in the room?
Yeah, so will the federal government sign a letter of authorization to allow the credits to be sold into the international market under Article 6 of the Paris Agreement?
So credits can be sold internationally in terms of voluntary markets, but Canada has not yet made a decision about whether those credits would be authorized for sale as internationally transferred mitigation outcomes, if that's what you're referring to.
That is what he's referring to.
And when will the decision be made?
When will that decision get made?
I'm afraid that's not a decision that I am involved in, but happy to follow up and potentially direct you to the right people who might be able to answer that.
Thank you. And thank you for staying on and answering questions. So we do need to shift. So thanks very much, Liz. It is 2:36. We have not gotten up for an hour and 26 minutes.
Hi there, everyone. Great to meet everyone here today and everyone online. I'm Michael Sohoyas. I'm the Chief Investment Officer of Carbon Streaming, and joining me today is my colleague Nazia Ibrahim, and she is our, I'll call her our carbon technical expert. If you have any detailed questions, Nazia is the one who will help out.
Is it green?
I have to press the on button. Hello? There we go. Okay, that's better.
Sorry, can you play that again, okay? Play the
All
tape
right.
from the beginning.
From the beginning here, Michael Sohoyas, I'm the Chief Investment Officer of Carbon Streaming. Joining me today is Nazia Ibrahim. She is our Director of Carbon Projects. She's our in-house technical expert. I'll give you a quick overview of our business. I've shared this presentation, happy for it to be sent around. As well as I'll jump through some of the slides quickly, as I'm sure people will have questions about carbon streaming, our business itself, and how we think it can apply for carbon projects from a Canadian basis. Just to kick it off, our primary focus is the voluntary carbon markets. Actually, we are a Canadian public company. We're a team of about 20 people based out of Toronto, Vancouver, and we also have team members in New York, Houston, and San Francisco. We look at carbon on an international basis, and we see a great opportunity for projects all over the world. And we look at it from the focus of buyers of carbon credit. So if you think about it, the groups who are effectively paying for those credits, what are they looking for their objectives when they're looking at their 2030 and their 2050 plans that they're setting? We truly see it as an international market. I'll talk a little bit about the partnership which we have in place with Wilson Zinter. We have a great partnership in place with Candace Wilson and Amanda Zinter, who are long-term experienced individuals working in the BC First Nations groups from a environmental and consulting background. A big part of our business is partnering with strong organizations to find in long-term investments for us. And Wilson Zinter, when we look at BC First Nations, is a very important strategic partner for us. Looking at our key partnerships all around the world, you can see here from the top left, you can see Wilson Zinter there as well. We have a partnership with a group called Infinite Earth, who runs one of the largest Vera projects in Indonesia. We also have partnerships with a group called Osisco and IG Wealth management. We're a part of, the majority of the largest global associations for carbon projects. Looking at, productivity, we're partnered with a lot of the key people who are covering the data and the tracking of the voluntary carbon markets, including Solvera, Expansive, and Trove. And then from an investor perspective, where we have 5 major financial analysts that cover our company. The biggest ones there, which you probably recognize, would be National Bank and TD Securities. In terms of major investments, which we've made over the past 12 months, we've made 9 investments. These projects have been in Canada, along with international investments. We've made investments into Brazil, Africa, Southeast Asia, and India, in addition to 2 projects in Canada, both of which are in Quebec. This slide here just sort of gives you a sense of where our key projects are located, but we're on track to have quite a diverse portfolio of carbon investments all around the world. We look at carbon projects to invest into a wide range of projects, from avoidance projects, but also carbon removal projects. And we see the demand from corporate buyers covering both types of projects on a long-term basis. In terms of when we look to invest, you can see here there's just a very simple project development timeline. We see us coming in when you already have a project plan developed, and when you're now thinking about project registration. Our capital, which can be done in conjunction with other sources of financing. We've done investments where it is concurrent with debt financing, concurrent with equity financing, concurrent with offtakes. We have a very flexible long-term investment model and can make it work depending on the project itself. Typically speaking, from when we invest, it takes about 18 to 24 months before you start to see credits being generated and ultimately sold on to corporate buyers. The process with a group like Vera, Plan Vivo, or Gold Standard is quite rigorous, and it does take that approximately 2-year period before you're receiving your first credit. This sort of illustration here just gives you a very high level view in terms of how our investment model works. Effectively, if you look at the circles there, the project partner is the group who owns the project itself. We invest into that group with what we call an upfront deposit. The project itself is then developed and created. Carbon credits are delivered to Carbon Streaming. We then have an in-house sales and marketing team, which we sell to international corporations, receive the money from those carbon credits, and then retain our share of the net revenue, and then redistribute the rest back to the project partner. I won't sort of get into all of the benefits here, but the way we try to position ourselves is providing benefits to both project partners and to the buyers of the carbon credits. We want to see ourselves as the intermediary between the projects and the corporate buyers, but also being an investor alongside the projects, so that when the projects do well and you're able to sell credits for higher prices, that we share in that upside, and that upside is importantly shared with the project partners. The one thing I'll sort of touch upon here is not joining me today is anyone from our sales and marketing team, but this is one area of the business which we spend a lot of time focusing on, and have an in-house team which works with corporate groups all around the world. The voluntary carbon markets is a very large industry. There's specialized groups who are selling to corporate buyers like us. There's groups like Climate Impact Partners. You've probably heard of South Pole before, and there's exchanges that are being created. There's a group called CBL, which is owned by a large US investment company called Blackstone. You've got corporate trading desks like Goldman Sachs and TD Bank that are active in the voluntary sector. And most importantly, you have end users of carbon credits from a voluntary basis that are, your largest corporations out there. One of the biggest buyers of carbon credits is Microsoft. Another big buyer is Stripe and Shopify. And you have groups like Accenture and Nestle, along with the airline industry with Air France being a major buyer. So what we look to do is to work with each project which we invest into and partner with corporate groups who we believe have a connection or have an interest in buying into that project. As companies are quite global, they're looking to invest in the carbon projects where they have operations or where they have a connection to. And Canada, I think, is a very important market and an opportunity for new projects to be created that buyers of corporate credits will be interested in. Looking at the voluntary market itself, there's a lot of market research out there today. In terms of market size, it's about 500 million credits that are sold annually. Looking to 2030, the views is that demand side is going to grow to about 1.5 to 2 billion tons annually. And the big picture growth really comes looking out to 2050, where all of the corporate commitments to being reducing their overall carbon footprint, getting to carbon neutral, and even some companies now thinking about how do we get to carbon negative by 2050. There's a wide variety of ways they're looking to do that through, better, efficiency, reducing reliance on fossil fuels, but there's only so far they can get to. Carbon credits, being avoidance and removal credits, are an important part of every company's plans. This chart here is from an independent third-party research group, which really looks at, you can kind of see it, but the bar at the bottom looks at the supply of projects out there today. So the market is in supply-demand balance. In 2022, even up to sort of 2025, the market is expected to be in a balanced position. It's really when you start to look at 2030, which we see as a very important year for the industry, where you're going to start to see that demand growth happen. And what's needed is high quality projects, but those projects need to start 2 to 3 years before 2030, so that they're positioned to be ready for sale of the credits to the corporate buyers that are going to really be looking for credits. And then beyond 2030, you start to see exponential growth. And so when we look at our business plan and when we're talking to our own shareholders and potential shareholders, we're talking about positioning ourselves for 2030. I'll sort of end here and then happy to answer any questions. But for ourselves as Carbon Streaming, through our partnership with Wilson Zinter, we're actively looking for investment opportunities in Canada and in particular opportunities in BC. We're very open to looking at different projects to see how we can be an investment partner and working alongside other investors as well.
Right.
Any questions or happy to end there?
I have just a quick question.
There you go.
Yes. You can just repeat my question because it's short and give a microphone. I was just wondering on your previous slide, you had the supply and demand. I was wondering, supply is going up, or sorry, demand's going up, that makes sense. Why isn't supply responding to demand? What's causing that huge gap that we're seeing? I would expect, as prices go up, supply to increase, at least to some extent, to approach that demand.
Yeah, so the chart here.
Can you repeat his question?
Yes, so the question was around supply and demand. When you look at this chart here, you can see that supply is not growing with demand. And the reason for that is this chart just includes projects that are currently registered. So what this shows is that more projects need to be registered. That registration process, takes 2 to 3 years before credits are first generated and issued by the standards. So right now, the market is supply-demand balanced, but unless more projects are registered and they think about registering, 2 to 3 years ahead of time, there's going to be a big shortfall that's created. So the opportunity is for project developers to start thinking with a 2 to 3 year timeframe before they're going to be receiving their first credit.
Is that working? Oh, it is. Good.
Almost tries a question.
You can tell it's getting the end of the day, the mics are all dying.
Is it on? It's on. Gotta push the button. Okay. You good? Come on.
No, you need the green light.
There we go. It's blinking, the battery's gone probably. All right, I'll just ask a question. Carbon streaming companies like Carbon Streaming are cropping up everywhere. So these companies are cropping up everywhere, whether it's Carbon Streaming, Pure Vita, Carbon Neutral, Carbon Royalty Group. And I worry, because I'm ignorant, about what the business model is of the streaming companies. And my concern is that for First Nations and others that sign up for this, how long are they signing up for? Because giving up the rights to sell the credits and giving them to a third party takes away a lot of power from those groups. So I've heard carbon streaming people out of the US talk about how this is the next $1 trillion asset class and really kind of feeding a frenzy, which is a concern of well. So a concern to me. I don't understand the business model. I can understand it from a profit-based perspective, but I don't know if you can share anything that gives people comfort with respect to when they're signing up. How long are they signing up for? How long are they committing for? If that's something that's really only that you can't share right now.
Oh yeah, happy to share anything really. So we look at each opportunity on a unique basis. We're an investment company, and to be frank, our goal is to be making profits for our shareholders, but we think that can be done at the same time as investing into projects which otherwise would not see capital as early stage as we're willing to invest. And you're seeing more and more companies like us evolve, and the reason is it's a real opportunity, and the opportunity is coming from the corporate groups and companies who are making commitments, which include the purchase of carbon offset and carbon removal credits in, by 2030, by 2040, by 2050, the demand is really growing. And our business model is we look at what we call a revenue share. So we'll make a upfront investment, let's say that's $1 million on an early stage basis into the project in return for a share of the revenue. And we don't look at putting any fixed pricing in place. So if there's shared participation in the upside of the carbon price, we hope with supply demand fundamentals showing that there'll be increased demand, that the price itself will start to move up. But it's very difficult for anyone to predict that. So we're making our investment model there so that both groups are participating in the potential upside. The other thing that we've done is when we look at ownership of credits with First Nation groups that we've spoken to, and it's even here on the screen on the third bullet, we're comfortable having a situation where the nation approves the buyers before credits are transferred to us to be sold. So if there's a concern about the credits getting transferred to carbon streaming, we can set up a model so that the credits are held in an account effectively until we connect them with a buyer of the credit, and then the transaction happens. So we can be flexible with that arrangement as well, and we can set it up so that there's an approval process in terms of who is buying those carbon credits.
No, appreciate that. I think the lesson here for folks is that in Australia, there are people who've entered into long-term agreements with credit developers, not credit streaming companies, to be very clear, but credit developers that they very much regret now, given the dramatic price increase that's occurred in the Australian market. So I think within all these opportunities, whether I'm buying your credits or carbon streaming's partnering with you to buy your credits, it's this issue of everything comes at a cost of capital. And I think it's important for the First Nations to fully understand what they're signing up for when they enter into any agreement with anybody. That's all. Again, it comes down to education in this very complicated market that we're in.
Thanks for that. And I've got a list here of things we might want to spend more time on over the coming months, and understanding the potential relationships between project developers and buyers. There's a whole range of them, including the one you were just describing. I imagine that the nations, everybody wants their eyes to be as wide open as possible before they sign on the dotted line, so to speak. So I think that's probably a to-do, if not to be confirmed today, either tomorrow or soon, in terms of what the priorities are for the nations to learn more about and think more about. I have a couple of questions. One of them just goes backwards. I should have asked this question earlier this morning.
That's not working.
It's not working now?
Now it is.
Now it is. Okay. It's a little tiny mic. So my question is about retirement of credits. And that gap made me think about it again. That's why I meant to ask the question this morning and didn't ask it. So if you could just, for those of us that have sort of an understanding, but not necessarily 100%, how, if you develop a project, you're generating credits on an annual basis, perhaps, or you're not. And you may have an opportunity to sell them once, but they don't, like forest garden projects can generate credits on an annual basis because the trees are growing, for example. So if you wouldn't mind just unpacking that a little bit, just want to make sure everybody's got this notion of retirement clearly. And then the other question, which is a bit of a segue into the following conversation, which you may have a response for and others may as well. It's the relationship with other sectors. So you are interested in BC and making investment in First Nations projects and in First Nations lands, and the relationship with the forest sector in particular is one of the things that needs to get worked out. And we heard one of the gentlemen from Northern Territories to talk about they've got a project, maybe it doesn't qualify from an additionality perspective, but from a biodiversity perspective, it might. There may be other values that aren't carbon. I'm just wondering, are you thinking about investments that relate to natural capital generally, or is it just carbon? And have you ever been working on investments that deal with the interface with other industries that may have an interest in carbon as well, like the forest sector, which is one of the things that each of these nations are going to have to grapple with? Thanks.
Yeah, happy to answer that first question, just around retirements. Each project itself is unique, but there's different types of projects that are similar. On the nature-based side, you primarily have protection against deforestation, where you will have an annual issuance of credits for the life of the project, and that's likely 25 to 30 years. And once the project is registered and validated, there's an independent third-party auditor that goes to the project site, does a report, works with Vera, we use Vera as an example, and then credits are issued by Vera on an annual basis. A project can decide to delay issuances and do a third-party audit every second year or every third year, depending on what they'd like to do. But there's the opportunity to issue credits annually for any projects that are avoidance and protecting against deforestation. For afforestation and reforestation projects, those credits are initially estimated based on the trees being planted and the biomass growth. And then there is also a auditing process, which typically happens depending on the size of the project, but every third year or so. You could do it annually for reforestation as well, but you may not want to do that until you're about 5 or 7 years in, before the carbon numbers start to grow higher. Does that answer the question?
Yeah.
Okay.
Thank you.
And then on the second one, I think that's a larger discussion topic, but I think two things that I'll point to is, one is when we look at projects, we look at the carbon itself being a piece of the project. We look at it from an overall basis more, where with Vera, there's a supplementary standard, I'll call it, called CCB, which represents your community and biodiversity, which is looking at, in addition to the carbon project, what is being done for the communities and for biodiversity. That in itself makes the credits generally more valuable from a corporate buyer of carbon credits, and we see that as being great for the project, and it allows the project credits to be sell for a potentially higher price. There's another one called SD Vista, which looks at the UN SDGs. There's the 17 UN SDGs, and with those, they do an independent assessment of, is the carbon project adding to the UN SDGs, and it's documented to show the corporate buyer of credits effectively, when they purchase the credit, what community programs is part of the money going towards.
I imagine everybody knows SDGs, Sustainable Development Goals. Other thoughts with respect to this sort of interface, if I can? Any other specific questions for carbon streaming? Or yeah, go ahead.
I'm just wondering, what's the percentage that over what time period? So
Sure.
yeah, what's the percentage that you're taking and over what time period? And if a nation partway through entered into that agreement but no longer wanted to be in that agreement, presumably they can't leave that. It's like you've created a joint venture, is that right?
Yeah, so we can look at it depending on depending on what the nation wants, we can try to structure an agreement that would work for the nation. So to date, we have not, had any discussions with First Nation groups getting into the detail of an agreement. For the investment agreements that we've made with other groups, those range from 7 years to 30 years. So we can, have some flexibility and come up with a model that can work, but we're looking for, agreements that are at least 5 years in length, and we're able to contract out to 30 years.
What was the percentage?
So the percentage itself depends on the economics of the project, and the first question is, what size of investment are they looking for? And we typically look for an approximate 15% return on the investments which we make. So one of the benefits of being a public company is this is all within our public information. So we're looking for about a 15% return on our investments.
And that was, I forgot to ask you to just introduce
Sure.
yourselves, Mary Kate,
Great.
and you're with,
Conservation through Reconciliation.
and she's with Conservation Through Reconciliation. Thank you. Shanda keeps getting reminded, and then she keeps on reminding me, and I keep forgetting. Sorry about that. Okay. Okay, any other questions? I do want to make this transition into the interface with other industries, and you may have views on that as well. So just a quick reminder, and Megan, is Megan still there?
I'm here.
Oh, good. Okay, so just remember back to June 7th and David Brand's presentation at the on behalf of New Forest, the corporation he's the CEO of, to all of you on the kinds of investments that New Forest is making. He presented at our Beyond Zero conferences as part of the NBS panel. And for those of you that weren't there or weren't online, that presentation, along with all the other ones, is recorded and on our website, on the FNCI online website. And for those of us who've been navigating these issues in British Columbia for a long time, it was kind of a new thing to hear about. And so I'm going to paraphrase, and then I'm going to ask Megan to clarify if not correct, and just kind of get the conversation started, because as I mentioned, Sabrina's here on behalf of Linda and behalf of Kofi, Council of Forest Industries, because they're very interested in how they can relate to and participate in First Nations-led nature-based solutions, rather than being framed as a competitor or an obstacle. And so, as David Brand told us, there's a whole new way of thinking in town, in the world, which is that forestry includes carbon. Forestry includes actually all sorts of natural capital. It's not just about cutting down trees and making them into timber products, but rather transforming the forest sector into a much broader set of values that are invested in. And some of those values stay in the trees, standing on the ground. And forest companies like New Forest are interested in, and some of the companies that are associated with Kofi are interested in pursuing these new relationships. And it, rather than this being a hurdle that FNCI nations or the nations participating in this process need to get over, it may be a different kind of conversation. And so with that, maybe Megan, I could put you on the spot over in New Zealand. Thank you for being with us. To just talk a little bit about some of the things you've been doing and some of the partnerships that you have right now.
Sure, happy to. Thanks, Alex. And nice to meet you all. So as Alex said, I'm Megan Struthers. I'm Associate Director of Business Development with New Forest, based in New Zealand. Alex, would it be useful, should I just give a quick intro to New Forest? I know you just did, but I can give a little bit more context and then talk about some of the examples and themes in our investment strategies. Would that work?
Yeah, that would be great.
Okay, excellent. So yeah, New Forest is a sustainable real asset investment management company founded by, as Alex mentioned, David Brand, who's Canadian, in 2005. So we manage approximately $9 billion of assets on behalf of institutional investor clients. So we are not a carbon project development company, we're an investment management firm. And the assets we manage include commercial forestry plantations, wood processing and infrastructure, agriculture. So we just recently launched our new agriculture business, and dozens of carbon offset projects in various regulated markets, being California, New Zealand, and Australia. And we manage just over 1 million hectares of land, I believe. So we're a global platform with regional strategies. Australia and New Zealand was where the business started and is the largest by area and asset value, but we also have a business in North America with an office in San Francisco, Southeast Asia, and very recently entered into Africa with our African forestry investment platform. So we've essentially taken an active management approach and always had a very strong roots in an ESG focused investment strategy for the 17 years that we've been around. Well before that was sort of a global theme. And as a company, I guess our vision is to see investment in land use and forestry as central to a sustainable future. So the business development team that I'm a part of, I'm 1/3 of, we have a global mandate to deliver new investment strategies that scale capital into nature-based solutions. So we hope that also includes Canada and BC. And so we've been quite actively looking at opportunities, trying to engage with different groups such as yourselves to understand the local context and opportunity and desires of various parties, so we can hopefully bring our capital, our expertise, and our perspective and execution capability to the sector. So in terms of sort of to Alex's question around the intersection of different sectors and how forestry and carbon and other areas come together, I suppose New Forest considers investment strategy in the context of a decarbonizing world. So we've heard a lot today about global themes around transition pathways to net zero, but we believe that any pathway to net zero necessarily includes a land use sector, and in particular forestry. So forestry has opportunity in sort of each of those different pathways. So energy, mobility, built environment, materials, and land use. We believe there's opportunities and the necessity to include forest management and forest products in those pathways to net zero. Excuse me. So we've really, I guess, have identified 3 main themes that we are tailoring our business around in our investment strategies for our clients. So those are the transition to a circular bioeconomy, natural climate solutions, and shared value with rural communities, including Indigenous communities. So I might just quickly touch on a few examples as to how we've sought to deliver outcomes and products that relate to these themes. So in terms of the transition to a circular bioeconomy, we have a track record of, and we seem to have an affinity to very complex transactions. I don't know if that's by design or by opportunity, but that's sort of where we've found ourselves operating over the course of our business. So We led the restructure of the Australian forestry sector. The hardwood sector in Australia was somewhat in disarray, and we put that, worked through the transition to turn that into an institutional investment asset class in the early sort of 2011, 2014. And we've continued to innovate and grow our portfolio and trying to integrate sustainable management, value-added processing, and carbon markets and natural capital. So we purchased a business called Timberlink, so that we rebranded it Timberlink, but it was 2 sawmills in South Australia and Tasmania, alongside a 95,000 hectare estate. And they were quite undercapitalized. And so we've steadily reinvested capital, well, our investors have, but on behalf of them, and expanded into new innovative products like we're currently building a CLT and GLT plant. So cross-laminated timber and glue laminated timber plant in South Australia, and a plastic composite decking product facility in Tasmania that's diverting plastic from landfill into a decking product. So that's just one example of sort of where we believe we can drive this transition to a bioeconomy. Around natural climate solutions, the imperative to address deforestation and degradation of ecosystems. We heard a lot today, and no doubt yesterday, and over the course of all the conversations about the role of carbon offsets and whether that's sort of making genuine progress towards climate change mitigation. And New Forest has spent a lot of time thinking about this, and we have we put out a demand side integrity position statement. It's on our website, but basically we believe that carbon offsets are a very important part of the puzzle, but it needs to be alongside making efforts towards genuine emission reductions. So when we're looking to sell carbon credits from projects that we've been a part of developing, we're very cognizant of making sure that it's part of a more comprehensive climate change mitigation strategy of those buyers that we're selling to. But just quickly in the US, so we've been a leader in the carbon markets. We've registered the first forest carbon offset project in the California cap and trade system, developed over 20 projects and created over 20 million forest based offsets in the California ARB market. We're active in the New Zealand ETS and the Australian Emissions Reduction Fund. We have a program that's called the Forest Carbon Partners. And so that's been in place close on 10 years, I believe. And we've worked with third-party landowners, primarily Native American tribes, and developed improved forest management carbon offset projects. And through that returned in excess of about $170 million of revenue to those Indigenous communities. And we launched an eco products fund back in 2008 that did biobanking and mitigation banking. So we've looked at a range of ways to implement what we're calling today natural climate solutions, but that's been very much in our roots and will continue to be a focus of ours. And then just lastly, the third theme being creating shared value. So we really are conscious of the potential impacts of things like carbon price and demand driving land use and outcomes that aren't necessarily beneficial to communities that exist in those places. So really, international investors, we believe, need to ensure that they have a social license to operate. And the investors will only succeed if their investments align with and create benefits to the communities. So there's a lot of ways to do this, creating bankable local businesses in the supply chain. So that can be as simple as paying our bills on time, having longer term contracts, partnering on land use to create diversification and expanded opportunities, ensuring there's a fair sharing of benefits and risks, and that those are attributed correctly for the certain circumstance, and bringing innovation and technology that, I guess, increase the economic pie rather than carving it up. So a couple of examples. Last year, we launched a program in Tasmania that was focused on partnering with small landowners and farmers to establish new plantations on farms to try and help create diversification and resilience and new sources of revenue on those sort of more marginal land and integrated with the overall landscape. And in New Zealand, a few years back, we partnered with a Maori iwi to acquire the trees and on their land that they had just received back from a crown settlement under the Treaty of Waitangi. And we established a forestry right where we harvested those trees and then handed back the land post-harvest, and then they were fully in control of the next rotation. So that's just, I guess, an overview of some of the different projects we've done. We see a lot of opportunity in Canada. We see the demand for a holistic solution that provides capital and expertise and partnerships to try and look at the whole, all the values of the forest and landscape, be that timber, carbon, hopefully biodiversity, water, jobs, and the like. So that's a bit of an overview, but happy to hand back to you, Alex, or take any questions.
Great, thank you. Thanks, Megan. I see a question. Okay, it's not a question. I just did the chat box there.
I can put the link to that there. No problem. Great.
I've got a question, and I asked Sabrina on my right here if she wanted to say anything on behalf of Kofi. But my question is, you've been here a few times, David. Some of us had the opportunity to meet you. I met you face to face. We met David, and he made a great presentation. And there's a lot of interest that you've expressed and New Forest has expressed. And you've been learning about the situation here in the province and the situations that the nations find themselves in. And so, can you just give us a bit of a better sense of what would be the pieces of the puzzle that you could put together or help your partner in putting together? So I'm going to give you an example to work from, but you don't have to use it. But I'm just going to go to Gary Ray's presentation on behalf of Soto yesterday, because if you recall, I put up the map. We saw the Caribou Partnership Agreement, protected areas. One of the objectives of that agreement is carbon, by the way, and then showed area that they were considering for additional carbon management. It could be part of an NBS project, and then areas that are in a TFL, a tree farm license, area-based tenure, which you're familiar with, Megan, and so Sabrina and everybody else in the room probably. And then there's volume-based licenses in the TSA. And one of the, because it on the non-private land, the public land that's in TSAs in the province, we manage on a volume basis. One of the ways that one of the indicators of a potential carbon benefit is a reduction in the cut. It's like it's an indicator of it. It's not the actual carbon, but it's an indication of the potential avoidance. But in most places in the province, all the cuts allocated. And if it happens to be all allocated to the First Nations that want to develop the carbon project, it's kind of simple. They can decide whether they want to pursue, in principle, they can decide whether they want to pursue timber products in the conventional way or dedicate some of that to carbon. But that's not always the case. In fact, most of the time it's not. And nations find themselves wanting to pursue carbon projects and nature-based solutions in a forest that's allocated under provincial statutes to other forest tenure holders, some of whom might be interested in participating in a collaborative, constructive, partnership manner, whatever the right words are, in making this real. And so what, from your perspective, Megan and Sabrina, for you to think about or possibly to speak to, what might that look like in a BC context, just so the nations can get a better sense of what it is that would attract New Forest or an investment firm like yours to come to the table and help make it all work?
Yeah, I mean, I think we necessarily have to look at the opportunity in the context of the policy and market framework that's in place today, and then what is the transformation opportunity to realize the full value of natural capital and optimize all the balance all the factors around employment and a viable, productive forestry industry and communities and biodiversity and protecting all growth and the like. Everybody knows all the variables. But when we look at, I think Dave Brand cited in his talk back in June, sort of, his estimation of the value of the tenures in British Columbia, which on the face of it is quite startling. But when you look at actually what forestry tenures are today, in my understanding, is essentially a contractual right to harvest timber, as opposed to, say, if you went to the US and you bought a forestry investment, from our perspective, from our client's perspective, you most likely own the trees and possibly control the land, but you can then optimize between carbon and timber and look at a landscape approach and try and do natural capital accounting and monetize all the different ecosystem values. But that, as you know, that the framework isn't in place right now with the structure of the tenures, even the area-based tenures. So in order to fully realize the opportunity for everybody involved, we believe that it needs to be a different sort of tenure structure that or some mechanism to be able to manage all the different attributes, not just timber. Does that answer your question, or?
I think in part, in that, if I can just jump in one more time, in some places you may not have willing partners, and so that isn't as easy as places where you do, and because it's complicated and the tools in the toolbox aren't necessarily the right tools, those places where the nations have tenure and the other tenure holders are interested either in selling or participating, it seemed to be good places to start. I'm just being a little bit more sort of focused on the conditions that need to be found or created.
Yeah, I mean, certainly communities and groups that are interested in engaging. I mean, we're not interested in forcing ourselves upon people. So yes, and then exploring, I guess, what a partnership or a investment structure might look like. Like, we're quite open to various scenarios where there might be a transfer of equity ownership over time, but we can bring the capital to an investment to get something up and running and get a carbon project established and possibly invest in processing or value added, like the examples I talked about, active forest management. So happy to, I guess, we don't have a defined, this is the solution, and we don't believe that it's a balancing act between having the investment structure and strategy developed enough that it's interesting and compelling, but we also want to find the best outcome for the specific opportunity. So it's a little bit difficult to give you this is what it looked like exactly. I mean, that's what we're trying to currently evaluate. What are sort of, and we're not in Canada right now. So we're trying to work out what's the sort of best first opportunity to create a presence and then build upon that.
Thanks. I'm just going to ask Sabrina if she wants to add anything to the conversation. It's 3:45. So this is just kind of a reminder of a conversation we kind of started before, and one that needs to continue because it's a really important part of figuring all this out. And I don't think the province is going to step in and fix it. And there's opportunities like the kind that Megan just described that have happened in other places that we can potentially make happen here.
Okay, great. Thanks, Alex. So as Alex sort of mentioned, I'm Sabrina. I'm with Kofi. I'm the Vice President of Environment and Regulatory and Legal Counsel. For those of you who don't know Kofi, we're an industry association. Our members include virtually all of the major forest licensees, most of the major pulp and paper mills, and most of the sawmill companies. I guess to give a bit of background on myself, and I've given some of you kind of the spiel. I joined Kofi about a year ago. I'm an environmental and Aboriginal lawyer by trade. I'm the first VP Environment at Kofi, and I joined with the mandate to develop climate change and reconciliation strategies and portfolios at Kofi. So to this point, and I didn't work in forestry when I was in private practice. So to this point, everything that I know about the sector and the industry has come from the sector and from the province. So I've really appreciated all the comments that I've heard over the past couple of days. In terms of how the forest sector is looking at the forest carbon piece, I mean, I don't really think I need to go into the scope of the paradigm change that forestry is facing in BC between things like the Blueberry River decision, the watershed security strategies, the biodiversity strategies that are coming. There is a lot on our plates. And I think to Megan's point, from my perspective, the sector has a role to play in sort of the green economy from all of the green building products and bioproducts that are alternatives to plastic and other petrochemical projects or products. But it's the land base, and I'm not gonna say that the status quo needs to be maintained, because it absolutely needs to change. But I think from Kofi's perspective, as I try and figure out how to guide and lead the sector through these transitions, is my question for the people in this room is really, what should the forest sector look like? Like, are we thinking, of going to a 3-zone management approach, that there are very defined areas where we can have plantation forests? Or is there scope for conversations around natural based solutions that are focused on biodiversity and other values that would still allow for some timber harvesting on the landscape? So really, I think just to sort of follow with Alex's theme of continued conversations, myself and Kofi are really interested in hearing what the sector could look like, what the province wants it to look like from the perspective of people other than the sector. BC forestry has been around for decades, and I think it's never really faced a scope of sort of paradigm shift that it is now. So it is a challenge, but there definitely, I think, are a lot of opportunities, but we're not going to do it on our own. So feel free to reach out to me at any time. And again, I'm really just grateful for the comments, and I hope that together we can figure out how to maximize both the carbon and the climate change and the nature-based solutions, and find a path forward to still have a forest sector. So Megan's point, I think there are some good products that come from the sector.
Great, thank you. But why don't we just say that's intended to kind of whet your appetite because it's 10 to 4. And I'm not, if somebody wants to say something right now, please do. It seems to me that we need to set the stage for a further discussion about this with Kofi, with people like New Forest, Megan, to just kind of explore the possibilities in the context of a real understanding of the circumstances that different nations find themselves in. every single one of these nations, as far as I know, to more or less is involved in the forest sector. And you know, in that fabulous video that Cassandra showed us yesterday, there was part of that where SICA is involved in the forest sector, and that sort of sector is changing. It's probably one of your members. So it isn't like we don't have that interest, or the nations don't have that interest. It's how do we put this puzzle together so that it works? So maybe we can just say that's one of the to-dos, and we have the conversation tomorrow is about next steps. We have more capacity and resources to support this conversation going forward. Sort of completed the pre-feasibility work to the state that it's at, which is great. And congratulations, everybody, and thank you. And now we want to move forward and learn about a lot of different things, including this one. So maybe I'll just say that's my closing comments and set up for tomorrow, and see whether Brian and or Herb would be willing to give us some closing comments in between now and 4 o'clock. Did I cut anybody off?
Thank you.
Okay. Thanks, sir.
It's time to say thank you. Maybe we could do this together. Count from
birth, tough learn of their responsibility.
all the way down, all the way around. Come on, join the table. Join the table. You got to join the table. Okay, we'll start with Chanda. You say 1 and then 2, 1, 2. Okay?
1,
Okay. 1, 2,
1,
2, 1,
2, 1,
2,
1,
2, 1, 2,
1,
2, 1,
2,
1, 2, 1,
2,
1,
2,
1, 2,
1,
2.
1.
2.
Okay, all the 2s will turn left and all the 1s will turn right. Stand up.
Sorry, people online, you can't participate. Imagine.
No, say thank you. Okay, now I'd like to say a closing prayer. If you don't mind. I'd like to say a closing prayer now. Ask you all to rise, and one of the things that we always do is we start the day with a prayer, and we always finish with a prayer. And last night I asked you to do something to brush yourself off before you walk into your house or where you're staying, and to brush yourself off before you go to your bedrooms, and so that you would have a good rest. I was just gonna jump into bed when I remembered my words, so I did a shake. And then I said, thank you for this day. And then I went to bed. I woke up refreshed this morning, and I hope you do the same tonight. So with that, I'd like to have you bow your heads and remember our brothers and sisters who are grieving. Remember those in need, those who are lost, and our children, our grandchildren, our nephews and nieces, in whose lives